Test. Test. Okay. Let's see, that's working. Now what I need to do is go to YouTube. Go to Wyckoff Mode. Let's see the live stream here. Clicked it. Now I'm going to mute it. Now I'm copying that link. Now let's go to Twitter. By the way, let me go in transition to that. Let's go to Twitter. Alright, let me go to the chat box, make sure everyone can hear me okay. Let me also go to Discord. Let me go to public chat. We have switched the live stream to YouTube here. Let me delete that. Let me then type everyone, then that. Now let me go to my Discord premium trade chat room. Let's also go, well, I just posted in the public, yeah. Unfortunately, I cannot post these links on TradingView, otherwise I'd get banned. So, not going to do that. Okay, thanks. We're going to wait a few minutes for others to arrive. If you don't mind any other social media that you may be on, whether that be, I don't know, Telegram or Instagram, TikTok, Twitter, Parler, Gab, whatever. If you don't mind posting a link, I'd appreciate it. I just think I have a lot to offer, and I don't want to sound arrogant or like I'm bragging or anything. Actually, all that I'm doing is actually kind of out of the kindness of my heart. Hey, I'm not going to be looking at a lot of pairs, just a few. I appreciate that, man. And if you don't mind smashing that like button, I'd appreciate that too. That helps kind of move it up in the queue on YouTube crypto discussion. I haven't really posted a lot in my YouTube or taken it very seriously, but plans are to take it fairly seriously here soon. I'm gonna run upstairs real quick, fill up my coffee. That will give a couple of more minutes for others to arrive. So we're just still waiting for a few more to arrive, and then we'll get started. So about 2 or 3 more minutes and we will get started. For now I'm going to there we go. Yes, there's a premium subscription on my website. That information is in the description here on YouTube. If you click more, look in the description here on YouTube, you see links there, some social media, and the website. Of course, Discord is social media. Just letting you know, everyone that's there now, their time has not started yet. The time that they paid for has not started yet while we're still here in beta. Those who've been here with me a while understand. New people probably do not understand what's going on at the moment. Me being by myself and basically the only one who knows this method that I use, because I'm the author and creator of this method. Not Wyckoff Mode, Wyckoff Mode 2.0, which is different from classic Wyckoff Method, but especially Phoenix Ascending, Badass B-Bands, and diagonal Fibonacci support and resistance levels that I like to use a lot as well. Me being the only one, I saw it was actually getting rather difficult to set alarms. It first started with a bunch of pairs, and then reduced the pairs, and then other things kind of went on with people trying to build a bot. Then I'm like, well, hell, I might as well do the same. But basically, to benefit the community, the premium subscribers community, to benefit all of us. But hey, the thing is, I'm going to discuss those methods for entry and exit on longs, entry and exit on shorts. That first started out fixed, meaning I had a fixed set of time frames, for example, and I started out in very low time frames rather than starting out in time frames in the short-term group. I started out in time frames in the immediate group. Why? Because I wanted to learn faster. But I'm not going to provide signals using the immediate group of time frames. I'm going to use the short-term group of time frames. Yes, I will use the 15-minute and the 8-minute. But let's say, for example, I use the 1-minute, 2-minute, 4-minute, 18-minute, and 60-minute, where I needed to see the levels of the K line, which is the yellow line for the stochastic RSI, to see the levels for the D line, which is the magenta line for the stochastic RSI, to see the levels for the green line within Phoenix Ascending, mainly those three for entry and exit, those three. And occasionally the red line, and blue line, they can also, especially the red line, help us determine whether or not we really want to, let's say, take partial profit, or 100% profit, meaning you close the trade altogether. Now that's it. It's coming back down because you may have been overextended up or overextended down. If you were overextended up on a long and you rode it up to the white upper B band, let's say, but then it quickly pulled back to the basis. Then the next candle after that, it started going right back down from the basis to the white lower B band, things of that sort. But I want to see the levels of those three lines mainly, and within a certain set of time frames that I was doing at first. A certain set of time frames for entry and for exit on longs or shorts. All right, and I also use the B bands where I wanted to see the percentage spread between the white upper and the white lower B bands. I wanted to see the percentage spread. Why? Because if I'm going to take a risk, I want volatility. I don't want sideways. So I also want to see the percentage spread of the B bands within a certain time frame. If we do not see the B bands expand, open up to make the percentage between the white upper and the white lower B bands a certain percentage that I discussed with premium subscribers, if it's not at least a certain percentage, has not broken that percentage, then we're not going to trade because there's a good chance it's still sideways. All right, but here's the problem. Market conditions are always changing. So it is folly, I say again, it is folly to assume that you can have a fixed set of time frames, like those 5 time frames I mentioned as an example, the 2-minute, 4-minute, 18-minute, and the 60-minute. That was 4 time frames. Using those, with market conditions always changing, the amount of buying pressure or selling pressure is always changing, varying. So then I learned it's important to make a script that is not fixed, set on 4 or 5 time frames to open or close a trade. I had to make it dynamic, meaning the script decides what time frame to use to open a trade and to close a trade. To close a trade, there's 2 time frames we're paying attention to. To open a trade, it's 4 time frames to pay attention to. But I'm getting into that with premium subscribers. All right, but I've been live testing in lower time frames. Now I'm kind of starting to also test using the short-term group and the near-term group, because whenever we start using this script is going to help me a lot, because now I'm getting back to what I was just saying. What was I just saying? I'm the only one who understands these methods. I'm the author and creator of these methods. All right. Since I'm the only one, I do not have others working with me to provide signals to premium subscribers. I told premium subscribers that are there now, that have been there for a while, your time that you paid for has not started yet and will not start until the signals have gone live and have been live for at least a week. Then their subscription they paid for will begin. All right, so that's number 1. So again, we're in beta. Number 2, these scripts that are currently in the process of being made, there's nearly 2,000 lines of Pine script. It's going to end up being nearly that. We're already at close to 1,500, like 1,491, something like that. But these scripts are going to help me provide signals to my premium subscribers. That's what they're going to do. But I had to make them dynamic. Fixed would not work. already have the closing conditions dynamic. I need to make the opening conditions dynamic. That's when I determined I will need to use 4 time frames most of the time, sometimes 3 time frames. But also the script would know when to. The script would always know what 3 time frames to use. But I also found I have to make a default set, meaning this particular set, no lower than this particular set, will be used to open a long or a short. We will not use time frames any lower than this particular set. I had to make a default set. But I will get into that more in detail with my premium subscribers. So yeah, there's some work that's been doing, but again, that's to help us at Wyckoff Mode be more proficient, more consistent. But also, that's helping me in what way? I will be able to get sufficient rest that I was not getting before when trying to provide signals, having alarms going off on it. No. I saw that was not going to work. So we need to automate signals. That's what I want to do. And the scripts will help me, in other words, being synced up with the website to send out those signals. It may end up being something similar to copy trading or something like that. I don't know. Haven't decided yet, because I also want to make it sufficient easy for the premium subscribers. Because in other words, I can be sleeping and the scripts are providing signals. Well, I'm sure subscribers would also like to be sleeping and trading. So there's several things that I'm thinking through here, that I'm working through, that I'm getting together. It's a process. Sorry, it's a slow process. I'm kind of like Charles. Those of you who are with Cardano know who I'm talking about. Where I'm kind of like a perfectionist. It's just important to me that if you do something, try to do it right. Try to get it right the first time. That's why a lot of work. I'm glad I've done this deep dive, let's say, into the indicators, even more so than I've ever done before. I'm glad I invested this time. I saw that I needed to do that. Not only has it benefited me, and I know it will in the future, but I also know it's going to benefit my subscribers. You'll see. But let me get some coffee real quick. I said I was going to get some coffee. Take a break to give time for people to arrive. But let me get some coffee real quick and use the bathroom real quick. I'm going to pee real quick. I'll be back in about no more than 3 minutes. No more than 3 minutes. So I'll be right back. I'm just taking a few sips of the coffee before we get started. Let me go to the chat. Measure twice, cut once. Yes. My dad always told me that. Getting some nicotine and some caffeine here real quick before starting talking again. Thanks for your patience. How many are viewing right now? 25. At least that's what it says on my end. It could be wrong. Okay, 25. We would probably have about 500 easily. I'm going to say 200 to 500 if I was able to do one on TradingView, just because I've been there longer than YouTube. I don't do much on YouTube, but that's going to change. I'm going to start doing more here pretty soon. I'm going to go ahead and switch transition. All right, currently looking at Bitcoin. Starting out with Bitcoin first. All right, you see our energy when it went down. In order for downward pressure to continue, that red line has to cross below level 50, and it did. And that downward pressure will continue for how long? Until the white energy comes back up to level 50. Will this white energy come up to level 50 in the 3 hour before the red line in the 6 hour can come down below level 50? You know, that is the question. That is the pressure race that we're currently watching. We currently have downward pressure going, of course, and we see it here in the 30 minute in the top left hand corner. Red went right back below level 50. First of all, when the white energy went below level 50, we have downward selling pressure. When the red goes below it, now we know that this downward pressure would not. In other words, if the red was not below level 50, the moment that white energy turns up, that price action is turning up. If that red is not below yellow level 50, the very moment that white energy turns up, the price action is going up. But that white energy's going down, let's say, and the red now goes below level 50, well, now we know downward pressure will continue more than likely. At least about 85% of the time. Downward pressure will continue until this white energy comes back up to level 50. Downward pressure would continue. All right, so we have downward pressure at the moment. This blue is, that's in the 30 minute. Need more lines on the charts, not clear to me. All right, when you say need more lines on the chart, I think you were being sarcastic. Those who follow me a while definitely see high value in these lines. Let me say that. How so? This aqua level 10 is synonymous with the aqua lower B band. This aqua level 90, aqua level 90 is synonymous with the aqua upper B band. White level 70, white upper B band. White level 30, white lower B band. Of course, yellow level 50 is synonymous with the yellow B band basis. The red line is the mean line, the price mean, that says basically where the fair market value is at that particular time, which is just below or in between yellow and white, in between yellow and white lower, not white upper, because that red's not up here at white level 70, it's at white level 30. All right, that's where it's saying the fair market value was at that time, but we see it's already turned down, hasn't it? All right, are we going to go down below aqua lower B band yet? Well, and let's say if we were to go down below it, would we stay down below it right now in this hour if that were to occur, if it were to turn down? Well, that red is going to have to make a pretty sharp turn toward down, and come on down below the aqua level 10 in order for the price action to go below the aqua lower B band with expansion and remain below it for a sustained period of time, meaning keep coming down. That's what would have to occur if it was to come down and keep coming down. But we also know with my methods, when the red and blue go below yellow level 50, this is the value of these lines. I can understand them being confusing to you if you do not understand them. That's why I repeat the same thing so many times. I know those who follow me for years are probably sick and tired of me explaining it, but I know I have new followers all the time, so that's why I try to repeat the same thing all the time. All right, but when that red and blue go below, not go above, but go below. Red and blue go below yellow level 50. That increases the odds for expansion down, for stage 1 expansion down. Do you realize when that occurs, isn't that telling us whenever this green was coming down and this red and blue were getting ready to go below yellow level 50, we would say that we have increased odds of seeing increased volume coming up very soon. The volume is about to increase very soon. Don't we also know that when we have this increased volume, that it's going, the odds are very high that this increased volume will be selling pressure to the downside. I also know if we're going to get expansion, and in this case expansion down because the red and blue are going down below yellow level 50, we're falling down from that yellow B-band basis, aren't we? That's where we opened on that candle. We're about to fall down from that because that red is going down from yellow level 50. Are you starting to see the value in the lines? I think you are. There's value in understanding all these lines and why I color-coded all of these lines. So I think that helped you there a little bit. But that's stage 1 expansion down. Now, we can have stage 2 expansion down if that red and blue both go below white level 30. And you see we got even more expansion of the B-bands. What's expanding? Opening up the B-bands. When I say expansion, those of you who may be confused, when I say expansion, I'm referring to the Bollinger Bands. But that's stage 2 expansion down. Now we can get stage 3 expansion down if both the red and the blue go below white aqua. It's a combination of white and aqua. If the red and blue go below white aqua level 20, that's stage 3 expansion. White level 30, stage 2 expansion, stage 3 expansion, stage 4 expansion. If red and blue and green, they all went below aqua level 10. You see those, that can be pretty significant at times. Excuse me. It's the same thing in reverse going up. If I were to invert, the same thing going up. When you get in a situation where the red and blue are going above yellow level 50, that increases the odds that we're about to have increased volume with buying pressure instead of selling pressure. And of course, if we were to look at the volume bars, wouldn't we see some big old bars there? Yes, we would. And didn't we also know that the odds were increasing that for that to occur? Yes, we did. In other words, this is a means, a way of you measuring when would be the best time to initiate your risk, when you're going to take a risk. Because taking a risk in here, especially with the B-bands that tight too, I get into that, and I have about 23 educational videos right now on the website, but there's about to be more, because I've also learned a lot more in the past about 3 months. It could be 4 months. 3 or 4 months that I've been working on and found and working on implementing these conditions that I determined is folly to create fixed. I learned I need to make that script dynamic where it knows at any given time what set of time frames to use to open a short or long position at any given time. And I also determined I needed to create a default set for the lowest set of time frames, etc., etc. Of course, I'm going to explain that in lessons on the website. That will be coming soon. But right now I've been doing live testing, making sure I get this right. Because I don't want to create videos and then have to edit or redo videos again, because determined I needed to do something else. So I want to make sure it's right. Let me go in. But that's stage 1 expansion up. If the red and blue go above yellow level 50, stage 2 expansion up would be going above white level 70, so on and so forth. But let me go ahead and reverse that back the way I had it, because right now it's inverted. Pace value moving average to 57 instead of 20. Are those lines still valid? But why? I always ask myself why anytime I do anything. Why would you change the moving average to 57? For what purpose? Yeah, Pedro, a lot of people are confused at time when they first see this, when they first hear this, what I'm saying. But I guarantee you, if you go to my videos on TradingView and my public profile on TradingView and look at videos, but you can also, when you go to my public profile on TradingView, go to streams and watch streams as well. Of course, we're currently in a stream right now. No, excuse me. Yeah, well, we were. I stopped it. Had to. We're on YouTube now. I forgot that. But yeah, go to my past streams, not the one that was short where I stopped because the chat was not working. But of course, you can learn a lot more if you sign up premium subscription on the website. But again, remind you, your time that you pay for is not started yet. Not until I begin providing signals again, which won't be too much longer. Set up super chat. Hey, I am not a YouTube professional, and as far as doing that, I have no clue. I told you, y'all can see I have not invested much time on YouTube. I have way more subscribers on TradingView than I do YouTube. I only have 2,590 something subscribers on YouTube when I have nearly 40,000 on TradingView. I don't understand YouTube, the platform, very well, so that's stuff I have to look into and set up and all that. Did I hear you have 1,500 lines to give signals? Is it easy for a noob? Let me say this, the educational videos that are on the website right now, they are there to make it more organized. It is not organized on TradingView. I do not have any organized educational videos on TradingView. That's on the website. But hey, there's going to be more educational videos added to the website. The reason I'm saying that is this. I taught telephone technicians, cable repairmen, and outside plant engineers for 20 years. I traveled the country in the U.S. Training telephone technicians for Bell South, AT&T, CenturyTel, that became CenturyLink, and then they sold to somebody else. Several other telephone companies, Alltel, several. Their technicians. Some would not let anybody else train their technicians but me. Because here's the way I see it. If you can't learn it, I failed. I failed. Period. If you can't learn it, I failed teaching you. But you'll see. You'll see if you invest time into it. You'll see. Everything takes time to learn, but my goal is it doesn't take you near amount of the time that it took to learn what I've learned up to this point than it did for me to learn. Because you have to realize all of this was designed, engineered, that we're using right now. All of this was designed, engineered by me. Because I was looking at everything else that everybody else was teaching, and I'm sorry, but to me, it was too much guesswork involved. Too much guesswork involved. I was bound and determined to find a way where I'm taking at least a lot of guesswork out of it. I'm basically going by odds, knowing when we have a higher likelihood of increased volume coming up, whether it be buying pressure or selling pressure that can create expansion. I know we're about to have a pretty decent chance for increased volume, and when we do, whether the price action can move to the upside or the downside. Also, the red and blue and green help us determine where the price action has a potential of going up to or down to. That's how we get our targets. That's how we get our targets. Now, the script that I'm currently working on, the conditions that I'm working on for those scripts, can tell us when to open and close positions, but it's not to the point where it can also tell us where the price action is going up to or down to. Meaning, if I was providing signal and saying, yeah, we're going to open a long position here, but the script would not tell us, yeah, we're going to open it here and we're going to close it here. No, it's going to tell you when to close it, when it's time to close it. It's not going to give you a target range of where to close it. It's just going to tell you when to close it, period. I haven't got it to that point yet, but me personally looking at it, I can look at it and tell about where we could be going up or down to for a long or a short. But the script, as far as programming a script to be able to know that as well, it already knows when to close the trade, when would be the best time, to close the trade. Odds are highly likely, yeah, go and close it here. If it continues going up on this long position, all right, well, we'll just get back in. Don't worry about it. But you know, right now we don't know that if it's going to keep going up, so let's go and close this. That's basically the way I'm setting up the script now. But as far as it telling us what price range we're going to close it at, no, it's not doing. Now I would be able to have a good idea of where that is, but the script would not know that yet. But that's another advantage of being familiar with the red and blue lines, what levels they are, along with the stochastic RSI, the K line and the D line. But also, you're not using a single time frame. You better be using multiple time frames, regardless of what indicators you're using, whether you're using mine or some other indicators. Whatever other indicators you may be using, the MACD, whatever, you need to be using multiple time frames. If you're not, you're going to have a hard time. You certainly are. You are going to have a hard time. But that's just what I've learned over the years. Again, my goal is it doesn't take y'all 8 years like it did me. I'd like for you to maybe do a 10th of that. A 10th. For some of you, a quarter of the time. And for very few of you, half of the time. I mean, it took you a long time. Some just have a higher aptitude, let's say, than others. But I found often those with not as high of an aptitude the reason they succeed is because they have drive. They have drive. Along with other things. All right, let's get back to the indicators. Okay, well, were you an outside technician, cable repairman, like using the, you probably were not using the Dynatel 965 DSP. You were probably using the JDSU, but then they were bought out by Turner. I don't know if you were using any of those meters or what, but anyway, I taught them how to use their meters to identify and locate troubles. When I say they, I'm talking about the outside plant technicians and cable repairmen. Taught them how to identify, locate, and clear troubles in the outside plant on copper wire, copper, twisted pair. But I also taught some outside plant engineers as well on how to design the outside plant, the proper way to design it. But I did that for about 20 years. That was after I got out of the Marine Corps. But enough of that. Let's get back to this analysis for a minute. Let's see, that's a 4-day. Yeah, I don't need to be in that high of a time frame. Let me go to Cardano for a minute. Red, looking at the 4-hour, and to make sure you can see that it's the 4-hour. Hold on a second. Appearance, let's go up to 20, apply to all. Let's also increase that maybe one more time. All right, right now I'm looking to see if we have any overextension down. How do we know where we have overextension? Remember I told you the red line is the mean line. Seeing how this red here is at the in between white and aqua? Is the price action between white and aqua? No. Currently, the price is in between aqua and orange. So we are overextended down a bit at the moment. We also see the green down here at the orange, level 0. and the price is currently at the orange lower B band. The red line is very close down here near the orange level 0, the price mean. So, but we are overextended down. The green is showing we're overextended down. Here the green was overextended up above the red line. The red, the price mean, was saying in between white and yellow B-band basis, white upper and yellow B-band basis. The red in between that was the price in between the white upper and yellow B-band basis right here. No, it was overextended up right here. But that's why you also saw that wick and the price wanted to come back down to where the red line was. When the red started to go below white level 70, now we see the price can definitely fall down from the white upper B band. It comes down, the red comes down here to yellow level 50. Now we know we can fall down from the yellow B band basis. And we can also get expansion, increased volume, or selling pressure down when the blue also goes below yellow level 50. Now we have stage 1 expansion down that has begun there in the 3-hour time frame. We also see we got that in the 4-hour time frame, didn't we? We started to see expansion down. All right, and we are overextended down a little bit. The red is going below white level 30 here. The price fell down from the white lower B band, fell down from it. We're starting to get overextension down because the green came down here near orange level 0 and the price came down, wicked down between orange lower B band. Went down to that. But has the red come down there to that? No. That's why we're seeing it, it's not going down real quick. It's trying to come back up, but will it come up? Well, no, not if these red and blues keep, especially they keep going right back. The green comes back down with the red and blue still below white level 30. That green comes down again. Same thing here in that was the 1 hour. Same thing here in the 90-minute. Red, and then the blue now went below white level 30. Red was already below white level 30. We can fall down from the white lower B band. We can fall down from it because that red is going down below white level 30. We can fall down from the white lower B band. And we can begin getting even more expansion down, especially if that blue also goes down below, but didn't the green come up? So we kind of rejected stage 2 expansion down. We haven't got stage 2 expansion down. We just begun with stage 1 right here, really, when the red and the blue both. Now when the blue gets below it, don't we begin to see these B bands open up? That's stage 1 expansion. We were trying to start stage 2, but it's not full-fledged stage 2, at least not yet in this 2-hour time frame. If that next 2-hour candle that begins 34 minutes from now, that green goes back down, the blue comes back down. We know when this red went below yellow level 50, downward pressure is triggered. How long will that downward pressure last? Until that white energy comes back up to level 50. But hey, you have to look at something else. If this white energy goes above level 50, yeah, we may have some upward buying pressure, but that red better get on up here above yellow level 50 real quick like if you want upward pressure to continue. So if this white energy goes above yellow level 50, let's say it just goes up here to about level 60 and then turns back down, that price action is coming right back down. Right then, it's coming right back down. It's impossible for upward pressure to continue. Why? Because that red line is not above yellow level 50. That's why. Let me see if I can find a good example. White energy went above level 50. The red line came above yellow level 50, didn't it? All right, we had upward buying pressure, but now that buying pressure will cease if that white energy turns down and that red's not above level 50. But in this case, red is above level 50. So in this case, now upward pressure is going to continue despite the fact that that white energy is coming down. Despite the fact that it's coming down, upward pressure is going to continue. For how long? Until that white energy gets to level 50. Didn't that price action keep going up while this energy was falling? Yeah. And that upward pressure lasted until when? Until that white energy went below level 50 here. Now we see a brief pullback, a dip. All right, now when the price action came down, did the red go down below white level 70? No. It tried to, but you see here earlier the green came up. The green came up. And now the stochastic RSI, the yellow K line, is above the magenta D line. So that's a good sign too, that hey, this thing's fixing to go up. The red is not falling down from the white level 70. Therefore, the price action is not falling down from the white lower B band. This green came up, knocked it back up. The red turned right back up. We went up again with expansion again, seeing how the red and blue are at least both above white level 70. That's a case for expansion again. The B band's expanding, opening up, and the price going up. And when you get expansion, that means the price has to go above the aqua upper B band. Or if it's going down, it has to be going down below the aqua lower B band in order for the B bands to even attempt to expand. I already know that. We're at least going above the aqua upper B band, at least up to near the orange in most cases. Not always, but in most cases. Again, that's understanding the line. So now let's get back to present day. Thank you for your patience. I haven't looked at the chat. I'll look at it here in a minute. I'm working on, somebody asked, how often do you give signals? I was giving them there for a while, but then stopped because I'm doing it all by myself and wasn't getting enough sleep, a number of things. Very little time with my family. I'm working on making it automated. That's the reason for the scripts. All the time I've been taking off for the scripts that I'm currently working on to have the ability to provide signals even while I'm sleeping. Even while I go on a vacation to wherever for however long. The script, everything's automated. That's what I'm working on. That's what I'm working on at the moment. If we want to go up from this white lower B band in the 1 hour time frame, this green needs to be going up and that red needs to be going up above white level 30. The red showing the price mean support, us going up from the white lower B band towards the yellow B band basis for Cardano here in the 1 hour. But we're not getting it. Man, that red and blue's real low in the 2 hour. Don't we know in the 3 hour we have increased odds for stage 2 expansion down? Stage 1 expansion down was when both the red and the blue went below yellow level 50. Now we can begin to see increased selling pressure. Even bigger candles. Price action going down right here. Ben Cowan and Wyckoff Method are all you need. Ben Cowan. All right. Ben Cowan. $2.1 million. All right, I hear you. I hear you. What I'm doing is seriously going to change the trading analytics industry. All I need is time. That's all I need. You'll see. You'll see. That's why I'm not. It bothers me none whatsoever to go to my so-called competition and have a look. I've watched him. Yeah, I've seen him. I remember who Ben is now. All right. We know these red and blues getting closer to white level 30 in the 6 hour and the 8 hour and the 4 hour. You know, we're beginning to get at risk of expansion down, aren't we? Right now we're probably wondering, in this 8 hour we should have already had visible sign of stage 1 expansion down, but we're not getting it. Well, let's look at other time frames, higher time frames, to see what could potentially be holding us back at the moment. Let's go and do that. Let me hide these drawings. Yeah, I'll do Ethereum too as well, Nab. Yeah, definitely the red line at the moment in the 12 hour. You know, we're already overextended down in the 12 hour, aren't we? How do we know that? The red line is the price mean. Red line is the price mean. It's saying basically where the current market value at this particular time in this 12 hour candle, fair market value, is in between the yellow and white lower. In between the yellow B-band basis and the white lower, that's where the current price mean is. Right now we're overextended down from that mean. We're overextended down at the moment. The green is showing that we are overextended down. It came down below white, came down below it, and the price is currently below it. So we're currently overextended down. Now, does that mean we cannot see this overextension down continue? That it's got to come back up to the price mean? Right now, no. Here, look at how the red came down in the 12 hour, showing the price mean here at the aqua lower. Aqua lower, the price was down below it. We were overextended down. Look how the green was below orange. Level 0, the green came down here towards the red. What did the price do? Didn't it wick down here towards the red? We kept on wanting to push down here toward the red. Red line came down below orange level 0. Look where the price was here, where it closed there on that candle, just below orange lower B band. And you're waiting for this K line, the yellow K line, to get above the magenta D line, number 1. Number 2, you're waiting on this yellow K line to get above level 12 at least at a minimum, and it did. You want the green line to also at least get above level 17, is what I normally go by on that, to consider opening a long position here, to note I said consider. I didn't say actually do it. I said to consider opening a long position right there. But look where the red is. Red's way down here. So you suppose then, if this green does come up, that and the price action is coming up, the green's coming up, do you suppose that this white lower B band will likely act as resistance because this red line being right here, is it ready to go above this white level 30? No. Then can the price go up above the white lower B band towards the basis right here? If that red is not ready to go up from that? No. Also note this. Remember I said when this white energy goes above yellow level 50, upward pressure is continuing. Yeah. But the very moment that energy turns down, that price action is coming down if that red line is not above yellow level 50. The only way that we can continue to have upward pressure, despite the fact that the white energy is coming down, the only way upward pressure can continue is if that red is above yellow level 50. I just gave several examples then as to why that white lower B band is acting as your ceiling of resistance. It's gotta be. Now this is in the 12 hour. So if you were using the short-term group of time frames, the 30-minute, the 1 hour, the 90-minute, the 2 hour, 3 hour, 4 hour, 6 hour, and 8 hour, if you were using the lower time frames in the short-term group, because I'm currently in the 12 hour in the near-term group, we already know that if you did open a long position here, you're not going to be in it very long. Don't you also know with this white lower B band right here, I guarantee you if we were right there when we were live, you would have saw the price right here. White lower, white upper, white lower. Currently is 36 cents. If I was using my replay tool for right here and then it start right there, we would see the price was around nearly 39 cents right there. You would have known around 38, 39 cents. That's my ceiling of resistance. It's time to close that long if I open a long. See, there's a number of things that I can explain to you that I do in my current lessons, 23 lessons on the website right now. But there's going to be more lessons added because while designing conditions, engineering the conditions for these upcoming scripts that will not be made public, that's private with me and another individual who is helping me build the script. He's excellent with the script. He's helping me with it. We collaborated together. But that just stays with me and him. But does that mean I'm not going to explain to people how the script will be able to tell you when to open and to close a long or a short position? No, I'm going to create lessons for that. I most certainly am. Those will be coming soon. How soon, I'm not quite certain yet. I'm still focusing on other things currently with the conditions on the script, doing some live testing. To then, after the live testing is completed, then it's time to add those conditions with all those time frames. How many time frames? 40. 40 time frames. That script will be monitoring the levels of the green line, the red line, the K line, the D line, the blue line, the white energy, all of those. 40 time frames monitoring those. And the B bands. One time, really it's 39 time frames, because one time frame will be used twice, security calls twice for that time frame, for all the lines within Phoenix Ascending and all the lines within Badass B bands. All right, but again, I'm going to explain this in lessons on the website. When that is done, when the script is built, I already have it dynamic for closing the positions and getting very close to all the conditions needed to make opening the position dynamic. meaning since market conditions can change, meaning very low volatility, the market sideways, or higher volatility. How do you know you're about to have higher volatility? Because we know from our lines with our indicator, Phoenix ascending, we know when we can have a chance, increased odds for increased volume. From what? Expansion. Whether it be expansion up or expansion down. Whether it be stage 1 expansion, stage 2 expansion, stage 3, etc., etc. But also being able to tell, I haven't gotten into much detail in that. I've basically told you on how we can fall up or fall down from or go up from, the white lower, white upper, whatever. But as far as also knowing where the price action could be going to whenever it falls down from or goes up from, based on the levels of the red and blue lines in multiple time frames, not a single time frame. You can determine about where the price action could be going to within the B bands. Then that's the reason why we have the price out here to the side for the B bands. But hey, the only way you're going to get those out to the side, you need to go up to your chart settings, then go to scales, and then you need to make sure that you have this box checked right here, indicators and financials value. That box needs to be checked on scales. Make sure you apply to all in order to see those levels. There's no need to also add the labels, because if you add the labels, they take up too much real estate, way too much. Let's get rid of those labels. Oops, I didn't undo it. There we go. And let me save. Alright, I'm still looking here. This is we came to the 12 hour. And I was saying, or basically pointing out that this red line, the price mean, it doesn't really look like we're ready to fall down from the white lower B band yet, does it? Because is that red down here getting ready to go below the white level 30 for the price action to fall down from the white lower B band? Now sometimes it happens. All of a sudden, wham, slams down, meaning it went way overextended down all of a sudden. That happens at times, and meaning the price action just didn't go down more organically like it did here. Believe it or not, this was organic going down, and we can see that, especially with the red and blue below white level 30 here. That green turns back down, we're getting expansion down. Then if they both, red and then the blue, get below level 20, we're going to get more expansion down. Stage 3 expansion down. Stage 4, if both of them get below aqua level 10, well, it was rejected. The green came back up. How would you have known that? Looking at lower time frames. This is the 12-hour time frame. But if you were looking at lower time frames, if you were high time frame scalping, but you also need to pay attention to the spread and all. But again, you would already know that, yeah, this is likely, has a decent chance of at least going up to the aqua lower B band from down here to the aqua lower B band, but could go up to the white up lower B band, but no higher, because that red's just not ready to go up above white level 30 in order for the price action to go up from the white lower B band to the bases. You would know if you did open a long position using your short-term group of time frames. That's why it's important to look at also the 12-hour and the 24-hour, so that, like, if you did open a long position, where's my ceiling of resistance? Where do I know that price action will have a very hard time going up from? You see what I'm getting at? So I know my ceiling of resistance, where I need to most certainly close my trade right here. Quite often, people have a pretty decent, if they do just manage to open a trade real nicely, they say, man, yeah, no, now I'm up 3%. Or if they're margin trading, I'm up 25%. Or when do I close the trade? When do I close it? That's often where people can mess up. And emotions get involved too. But that's why another reason for working on these scripts. Why? To take emotion out of it. Bottom line, the script says, all right, I was programmed that if I see this, this, and this, and this, in these time frames, it's time to open that long position, or it's time to close that short position, time to open that long, or time to open that short position. And then once it's opened, it will also know what time frame to use to where it's best at that particular time to close that trade. If it turns out, if you opened a long, you closed it, made profit, but then it ends up going up higher, I'm also setting the script up where it opens along again. But again, at the same time, I'm wanting to take emotion out of it. Bottom line, if I see this, this, and this, and this, we do this. Period. But when we see this, and this, and this, and this, that's when our odds are increased of us doing this. So I have no business even opening a position until I see increased odds. How do I have increased odds? When I see certain conditions met in certain time frames. But again, I'm trying to take emotion out of it. Especially for me, myself, because when you're providing signals for other people, especially paying subscribers, it's important to you that you succeed. Because they're like family to me. If I fail in a signal, give them a bad signal, they lose money, I hurt just as they hurt. In fact, I think I hurt more than they do. They may not think so, but I do. I hurt pretty bad. So I decided it's time to stop doing that. I need to take emotion out of it and have everything set up in the indicators, and it'd be able to do things, provide signals even while I'm sleeping. So that's what I'm up to. Oh, when you say banging a mic on the table, any idea? Oh yeah, sometimes I do hit my hand on the table. Sorry about that if that made a lot of noise. Sorry about that. Whenever I'm trying to get a point across. Man, yeah, we're still below the aqua lower B band. You see how the red, the price mean, is down here at aqua level 10. The price is currently below the aqua lower B band though. And that's obvious because isn't the green that moves with the price? When it was coming down here, when the green was coming down, I said, man, this thing may be heading down here towards the orange lower B band. Orange lower B band. Orange level 0. We may be heading down. Also, don't we know when the red and blue go below white level 30, that increases the odds for stage 2 expansion down? Didn't I tell you earlier, in order for there to be expansion down, or when there is expansion down, the price has to move, begin pushing against the aqua lower B band in order for the B bands to expand, open up. Same thing if we were inverted. When we have expansion up, the only way you will see the B bands expand, open up substantially, that means the price action has to go above the aqua upper B band for expansion up. For expansion up. That was with me inverting it. Let me turn it back. Alright, but we knew that there was a decent chance for expansion down in this case. Stage 2 expansion down, because red and blue both getting below white level 30. We can fall down from the white lower B band now with expansion, meaning we can bust through this aqua coming down here near this orange. Especially this green comes down, it can overextend down here to the orange level 0. Now the red and blue are starting to come on down here towards orange. Like right here in the 2-day, this was the 3-day. In the 2-day, you think we're going up from this white lower B band towards the B band basis with authority anytime soon? With this red down here, is that red anywhere near white level 30 to justify us going up from the white lower B band towards the basis? We might get overextension up there, but it's coming right back down to get in line with where the red line is. If it did all of a sudden just see bam, it move up all of a sudden, be careful, bull trap. Be careful, bull trap. If it all of a sudden went up above the white lower B band, wicked above it, because you'd end up seeing a wick, it's coming right back down more than likely. Why? Is that red, if it all of a sudden did that the next candle, is that red anywhere near ready to go up above white level 30? No. So I would look at this white lower B band as our ceiling of resistance for sure. But right now our aqua lower B band is acting as a ceiling of resistance, isn't it? With that red going down below aqua level 10, the price below the aqua lower, right now that aqua lower B band is acting as resistance. That K line needs to get up at least above level 12, but I prefer it above level 15 at a minimum. That K line, yellow K line, needs to be above the magenta D line, number one. Number two, let's just say the yellow K line in this 2-day, it needs to be at least above level 12, but preferred above level 15. That green line, at least get above level 17, but at least 20. Before I even thought about opening a long for a swing, I'm not talking about scalping, I'm talking about a swing trade. Before I even thought about opening a long here, I need to see all those things I just mentioned. Also that red, it needs to be coming back up above aqua level 10 to justify us going up from the aqua lower B band to the white lower B band. We need to see that, and we're not seeing that yet in the 2-day time frame. Everything that I'm saying about this 2-day, you can say the same thing in the 2-week, or the same thing in the 2-hour, or the same thing in the 2-minute. It doesn't matter what time frame, the rules are the same for the most part. As you get higher and higher, rules are the same, but the requirements can be different as you get with higher and higher time frames. I get into that into some of my lessons on the website too. Man, that red and blue in that weekly, y'all, went down from the white. That red went down below white level 30. Therefore, the price action can go down from the white lower B band. Don't we also know we can see expansion, stage 2 expansion down? Stage 1 expansion when the red and the blue are both below yellow level 50, but you also need the green going down below yellow level 50. Finally, when it went down, especially here, now we started to see a little bit of stage 1 expansion. Then we had stage 2 expansion. This now beginning, how these B bands are still opening up at the moment. We also see the green came down here near orange level 0. The price action came down here near the orange lower B band. But in that weekly, it's still looking like we can have more expansion down, but it's not in a hurry to do it just yet. Why? The 6-day is kind of holding us up a little bit. See, the red is below white level 30. The moment that red went below white level 30, follow my dashed line up. Didn't we begin falling down from the white lower B band when that red came down below white level 30? Yeah. So we're starting to see a little bit of movement down. Now we're starting to get some expansion down because really we didn't get much stage 1 expansion down when the red and blue came down below yellow level 50, along with the green going down and the energy going down. They're all going down at the same time. We aren't getting much stage 1 expansion at all. Now we're starting to get stage 1 expansion. We have not begun stage 2 expansion yet. Why? Because that blue is not also below white level 30. That's why. We're getting close to that in the 5-day. Red was already below it. We fell down from the white lower B band. Let that blue get down below white level 30, which it is now at 28.39. And there's basically 4 days, let's say, 3 days, 23 hours remaining in the current 5-day candle. We could begin expanding down towards the orange lower B band at 32 cents. We could see that coming soon. We begun stage 2 expansion down in the 4-day. Y'all see that. And that red's down here below aqua level 10. So the aqua lower B band is acting as resistance. Certainly is. If we want to know that we have a good chance of going up from the aqua lower B band, to go up from the aqua lower B band, at least to the white lower B band, it would help to begin seeing this red turning up from going above aqua level 10, knowing that, yeah, if it goes up, is it going to go up for a sustained period of time? Well, we would need that red to go up above aqua level 10 at a minimum. But hey, a 4-day, each one of these candles is 4 days. If we're going to go up from this white lower B band towards the yellow B band basis, the price action is going to do that for a sustained period of time. Doesn't that red need to be on up here ready to go up above white level 30 to increase the odds of us going up from the white lower B band towards the basis? Correct, yeah. We got to see that. So if it did go up, especially overextension up, more than likely that white lower B band's it. If we overextended up the next 4-day candle that begins in 22 hours, if we did see that, the white lower B band is likely going to act as resistance for quite a while, because that red has a lot of work to do to get above white level 30. So yeah, if we do see any just sudden move, all of a sudden going up, that white lower B band in that 4 days it. Same thing in the 3-day, because of where the red, the price mean is. Same thing in the 2-day, because of where the red, the price mean is. All right, that green needs to flip up in this daily, this 24-hour. The next candle, that green needs to flip up, and that red be on the verge of going up above white level 30 to have a chance of going up from the white lower B band in the daily towards the basis. We'd have to see that occur in the daily in order for this to turn around in the 2-day and then the 3-day, meaning for the green to begin going up, the red to begin going up. Same thing in the 3-day as what I mentioned in this 2-day. If you want to see a change, that green going up in the 2-day, you have to look at lower time frames. We looked at the daily, looked at the 12-hour. Really, what's holding us back from seeing any kind of serious expansion down at the moment, that red is just not ready to go down below white level 30 to increase the odds of the price action going down from the white lower B band like we did right here. Here the red went below white level 30, but the green was coming up at the time. See right here, it's above white level 30. The next candle is below white level 30, but the green's coming up in this 12-hour time frame. You would be using lower time frames to determine when to make that entry. On a short right here, you'd be using lower time frames. I will be creating lessons getting to knowing what time frames to use to open the trade. But the green was coming up here. Now when that green's going down, and the red and the blue are both below white level 30, oh gosh, that's going to increase the odds for expansion down. And with the red already showing the price mean right here, but especially what I was showing here, the red going below white, this is the weekly up here, when the red went down below white level 30, that increases the odds of going down from the white lower B band. Excuse me, that's white yellow level 40. This is white level 30, where we can go down from the white lower B band. With expansion, when that red and blue are going together like that, they're not really spread far apart like they are here in the 6 day. The red and the blue are kind of spread far apart. When they're right here together like this, yeah, you'll usually see expansion down like that, even though the blue's not below white level 30, but the red already is. This candle right here. Let's go to lower time frames. Again, this was Cardano looking at the near-term group. I went to the short-term group. We were not seeing visible sign of expansion, stage 1 expansion down in the 8 hour. Even though the red and the blue are both below yellow level 50 here, normally, not always, but normally you should see stage 1 expansion down, but we see no visible sign of expansion. Okay, well, that does happen at times. Sometimes it's delayed. It's not going to come down or begin to expand down until the red and blue both get below white level 30. So note how the price action's just been going real tight, standing here between the white and aqua for the most part. The red has finally come down here to where now it's just above white. Red is the price mean, remember? So if we're going to go down from the white lower B band, we want to have an increased chance of seeing expansion here where the red can go down, because look at how tight the B bands are. So if we're going to go down from it for a sustained period of time, first let's get this red to go down below white level 30. So the green needs to keep going down. It doesn't need to turn up. You know, the green needs to keep going down, and the red going down below white level 30. Yeah, we can begin to see finally some expansion down. Then the blue, the next candle, see, first I'm saying the next 8 hour candle. We have 5 hours and 54 minutes remaining in the current 8 hour candle. Alright, so we may not see expansion down this current 8 hour candle. But that next 8 hour candle, we may see expansion down. The only thing that can stop it is if that green turns up. If the green turns up, that means the price action is turning up in this 8 hour. How are you going to have a good idea of whether this green's going to come up? Save it. Keep it from seeing expansion down. Look in time frames that are lower than the 8 hour. Cut it in half, looking at the 4 hour, the 3 hour, the 2 hour, to see if it's going to keep going down. The same thing that I was mentioning, the 2 day, the 3 day, the 4 day, the weekly, talking about if we're going to go in this 2 hour, if we're going to go up from this white lower B band in the 2 hour towards the basis, meaning if we're going to begin to see any attempt of a reversal, doesn't this red need to come on up here to be on the verge of going above white level 30 to increase the odds of going up from the white lower B band towards the basis? Yeah, we need to see that in order for us to give us any potential attempt for a reversal to turn around, or at least delay expansion down in this 8 hour. That's what we need to see occur in this 2 hour. Right now we're not seeing that, where this red looks like it's wanting to get ready to go up above white level 30 in that 2 hour. So right now, it certainly doesn't look like that we're going to see a reversal yet. At least not yet. We don't see that yet. Is there a potential for it to occur? Yeah, but it better occur soon. Maybe not this 8 hour candle, but that next 8 hour candle, almost 6 hours from now, sometime between the next 6 to 14 hours. Why did I say 6 to 14? Because that next candle has 8 hours in it. 8 hours. So 8 hours in the next candle plus the 6 hours remaining in the current candle is a total of 14 hours. Sometime within 6 to 14 hours from now, we might begin to see expansion down in this 8 hour time frame. But that's providing we continue to see these red and blues continue coming down. Now you may see the green come up for a bit. It may come up for a bit. If it does come up here in this 3 hour time frame, looking at where that red line is in this 3 hour time frame, do you think we're going to go up from this white lower B band towards the basis anytime soon? Not with that red this low. Is that red turned up, getting ready to go up above white level 30 to increase the odds of going up from the white lower B band towards the basis? No, that red line's nowhere near white level 30 in that 3 hour. We're watching these lower time frames here. If you had opened a short position, like using the 6 hour, the 4 hour, red and blue falling below yellow level 50, we can fall down from the basis with stage 1 expansion, in the 4 hour. And we see in the next 6 hour candle, now the red and blue are both below level 50, yellow level 50 in the 6 hour. Already below it in the 8 hour. But you see that we got no visible expansion in the 8 hour. So one thing that's likely holding us back from getting that expansion down, y'all, in that 8 hour is because of what we just saw in that 12 hour, is this red line in this 12 hour down here at white level 30 getting ready to go below white level 30 in order for us to fall down from the white lower B band in that 12 hour. We're not quite ready for that yet. We have almost 10 hours remaining in the current 12 hour candle. So this may be just a slow bleed, just riding right on top of this white lower B band in the 12 hour for a moment, at least for this 12 hour candle. That's what but hey, the way that short term group is looking, right now we are overextended down in the 12 hour. Not a whole lot, but we are. Because isn't the red in between white lower and yellow, meaning the price mean is showing the price, in order for it to be perfectly aligned with the indicators, the price needs to be in between the yellow B band basis and the white lower B band. That's right here around almost 37 cents. Well, the price is down below that. So that means we are overextended, and in this case we're overextended down, and we see the green is showing that we have a chance to come down to this aqua lower B band. Aqua level 10, aqua lower B band. We have a chance to come down here to 35 cents. This 12 hour candle, there's a chance for that, for it to continue overextending down, because we are currently overextended down. When we are overextended down, don't assume that it's immediately got to snap back up sometime during this 12 hour candle to get right back in between the yellow and white lower, because the red is in between the yellow and white lower. Don't assume it must come up there like that. No, it doesn't have to, especially seeing everything we're seeing like in the 4 day, the 5 day showing a chance for continued expansion down, stage 2 expansion down in the 5 day. The 6 day is on the verge of seeing continued expansion down. The weekly red and blue both below white level 30. We got stage 2 expansion down begin there in the weekly. So there's a decent chance, y'all, of this continuing. It's just slow. It's moving slow, very slow at the moment. That 6 hour blue needs to go below white level 30. The red needs to go below white level 30 in the 8 hour, and the blue needs to come on down here getting ready to go below white level. So it could take, let's say, 6 hours remaining in the current 8 hour candle, the next 8 hour candle, that's 14 hours, and then the next 8 hour candle, where then finally both the red and blue are below white level 30. If we add another 8 hours to 14 hours, that's 22 hours. So it may just be slow, just kind of still tight in here for a while. Then after 22 hours, they do a bull trap down. That will happen a lot. A bull trap, go up a little bit first, then before then wham, slamming it down. We should not have a long position in our mind whatsoever right now, in my opinion. No, we should not have open and a long position right now in our mind. The red in the 6 hour going below white level 30, showing we can fall down from, which the candle did open just below the white lower B band, knowing we can go down from that white lower B band in that 6 hour, the way that these look. But it may be a slow bleed down, mainly because, again, with the red and blue both needing to be below white level 30 in the 6 hour. Red and blue both need to be below white level 30 in the 8 hour. And then back to the 12 hour. Blue's already below white level 30. Is the red below white level 30? No. That's what I'm saying. There's a chance that this can still be going sideways a little bit, but with selling pressure. Not buying pressure, selling pressure. We could see a slow bleed down until both the blue and the red in this 12 hour, they both finally get below white level 30, and then all of a sudden, wham! That's what it could be. So multiple 12-hour candles, 2 more 12-hour candles after the current 12-hour candle. The current 12-hour candle, let's say, has 10 hours in it. Then 2 more 12-hour candles after that. That's 24 more hours after that. So that's 34 hours, almost 36. It may take up to 36 hours, 1.5 days. It could potentially take that before if we were to see a slam down. Right now I'm seeing a slow bleed down, because like I said again, that red in that 12 hour, also in that 6 hour and that 8 hour, they're just not ready as far as being below white level 30. Red and blue both below white level 30. To see a significant move down all of a sudden, we may not get that. It may just be a slow bleed down. Slow bleed down. Right now it's just a slow bleed riding right. We see where the candles are closing, opening and closing right along this aqua diagonal trend line here. But in order for us to really see a slam down in this red diagonal channel for Cardano, like I mentioned in the publication posted earlier today, in order for us to see that, it may take up to 34 more hours. It may take up to 34 more hours before we see a chance, increased odds of a significant move down from this aqua diagonal trend line down to either the upper boundary or the lower boundary of this red diagonal channel that went on up here. That red diagonal channel that I mentioned in the publication, Cardano publication posted earlier today. Let's get back to Bitcoin. I'll get to S&P 500 here in a minute, but somebody wanted me to talk about Ethereum. Yeah, Bitcoin just looks sideways at the moment when looking at that 12 hour. With that red this high above yellow level 50, see how the price action is still for the most part remaining above the yellow B-band basis. because the red is well above yellow level 50. So the price action, yeah, we may have wicked down towards the white lower B band here. Was the red anywhere down here near white level 30 to justify us going down from this white lower B band? To increase the odds of going down from that white lower B band? Was that red anywhere down here ready to go below white level 30? For the price action to continue going down below the white lower B band? No, that was not the case. We were overextended down, especially when we came down here near the white lower, right here, and that red is nowhere near white lower, white level 30. It's nowhere near that. So, you know, it come back down here. You might, if you were scalping, there's only a 2% spread here in the 12 hour. You would really rather open a long position. When you see overextension down like this in that one candle, overextension down in the 12 hour like we're seeing now, but right there was only about a 2% spread at the time for Bitcoin. Hell, you may have had 6 or 8% for Matic right there, where there was an overextension down. You opened a long right here to go up, but hey, don't count on it going up above this white upper B band. Don't count on it going up above that, go up from that white upper B band. Now, is that green coming up? Yeah, the red is near white level 70 to increase the odds of us going up from the white upper B band towards the aqua upper B band. Yeah, the red is there in position to potentially do that, but that green needs to come up that next 12-hour candle. Will we do that this candle? It's not looking like it. That green, this 12-hour candle hasn't closed yet. You know, is it possible for the green to turn up this candle and close up about right here? Yeah, it's possible in that 12-hour time frame. But to determine the odds of it doing that in the 12-hour time frame, don't we need to go to lower time frames, the short-term group, to look and see if it might do that? You know, in the short-term group, of course. Right now, this green's going down in the 2-hour. The red is below white level 30. Isn't the price below the white lower B band? So we're going down with the green going down now. It's going down from the white lower B band. But if we want to see a significant drop down, if we want to see increased odds for the price action going down substantially, significantly, we need both the red and the blue getting below white level 30 to increase the odds for seeing a significant move to the downside here in the 2-hour. A decent move in the 2-hour in order for to see that occur. But yeah, we are still overextended down a little bit in the 12-hour, 8-hour, and 6-hour. We're overextended down a little bit. Can it continue that overextension down? Sure, of course, but it doesn't appear to be in a hurry to just wham, slam it down, you know, continue that overextension down. It doesn't look like it's ready or wanting to do that. We've been overextended down in the 6-hour for quite some time for Bitcoin. As far as opening a short right now for Bitcoin, short should have been open a long time ago. If you were scalping, like this 3-hour on the verge, it's on the verge. The K line was already below the D line, this candle here, and the red is on the verge of going down below white level 70, increasing the odds for the price action to go down from the white upper B band. But don't we see that wick to the upside? Because they did a bull trap first. Looking at it in this 3-hour, you see a wick above where we opened. Well, you would have to look at lower time frames to have seen that coming. You would have had to have looked in lower time frames. Was the red and blue in this 90-minute right here, where we went up with that bull trap to get that wick before then finally coming down. That's looking at it in the 90-minute. Talking about this right here, where we had a wick. We opened here, had a wick up before then finally seeing red it coming down, because the red right here was saying, hey, we have increased odds of going down from this white upper B band, because this red line is going down from white level 70 right here. Yeah, we've been overextended down for quite some time. We went down to the white aqua lower B bands without both the red and blue being down below white level 70. When the red goes below white level 70, that increases the odds of going down from the white upper B band to the basis. But to have increased odds of going down from the basis to the white aqua lower, usually we also need the blue to get below white level 70 to increase the odds of going down to the white aqua lower. And you see, as far as where the candles opened and closed, they're right in line with where the red and the blue, when they both went below white level 70. Well, now that increases the odds to come down to the white aqua lower. You see the bodies of the bodies, not the wicks, but the bodies of the candles are now getting down here to the white aqua lower, because now both the red and the blue are below white level 70 in that 3-hour time frame. But if you were going to open, of course I'm going to get into more detail of what set of time frames, how to know which set of time frames to use to open that short position. I'm going to get into that with lessons on the website, which will basically give you an idea of what the script that I'm currently working on will be doing. How the script will know when to open that short or when to open that long. Also when to close that short or long. I will be creating lessons for that. But y'all see, we are overextended down at the moment in that 6-hour, because that red is just now getting below white level 70, and the price is down here below the yellow B band basis. The red is not even below yellow level 50 to justify us going down from the yellow B band basis, to go down from it for a sustained period of time. Is that red getting ready to go down from the yellow level 50? No. In that case, I'd be careful opening a short at the moment as far as it going down for a sustained period of time just yet, because that red is not down here near yellow level 50. Yeah, that green may pop up one more time and then turn down again. In other words, giving time for that red to come down and then the blue come down, where we begin to see the bodies of these candles finally get down here to white aqua lower, because then both the red and the blue are below white level 70. When they both get below that in the 6-hour, then we can begin to see increased odds for the price action to continue coming down here to the white aqua lower. But hey, if we want to go down from this white, oops, what the heck just happened? I've never done that before. All right. If we want to see us go down from the white lower B band in this 6-hour, to go down with authority, we need this red line to be on down here in the 6-hour, getting ready to go below white level 30. So we may play around in here for a while, y'all, inside this 6-hour. Same thing in the 8-hour. We may be playing around in here for a while yet. I don't think, it may take up to 34 hours, like I mentioned earlier, before we see increased odds of a significant move down. We may have to wait at least up to 34 hours, is what it's looking like at the moment. For BTC, the 6-hour energy is pretty low also. Yeah, I agree. Don't we know that, yeah, we've had selling pressure. In order for that selling pressure to continue, that red line needs to get below yellow level 50. If this white energy turns up, that price action's coming up if that red line is not below yellow level 50. The very moment that white energy turns up, then we have increased odds of that price action turning up if that red line is not below yellow level 50. So if you did not already open a short right here at this white upper B band in the 6 hour, how would you have known that? Using the 3 hour, along with the 2 hour, the 90 minute, the 1 hour. That's all I'm going to say on that bit. I'm not going to get into detail here on YouTube as far as how to know what set of time frames to use to open a short position, how to know what set of time frames to use to open a long position at any given time, because it also depends on market conditions. And I'll get into that on the website. No disrespect intended, but I've increased my intellectual value for several reasons. I've invested time, my time, but I've invested time, which is the most valuable commodity in the universe. Time. Everybody wishes they could live forever. They could be youthful forever. Time is probably the most valuable thing that most people take for granted. But I've invested a lot of time. Each hour, everybody has a value on every hour of labor that they invest. Everybody's time has value. Some have more value than others. I'm trying to increase the value of my time so that if I decide to invest my time, or spend, not invest, because I've been investing time for sure the past 8 years, but if I decide to spend my time, which has value, to increase the intellectual value of others, I'm sorry, but that needs to come at a price, because my time has value. Period. Everybody's time has value, but we determine what that value is, and that's often determined by what you invest your time in. That's all I'm going to say there. But I am an anarcho-capitalist. I am not an anarcho-communist. I am an anarcho-capitalist, like Dollar Vigilante. But yeah, I'm all about capitalism, but genuine capitalism, not this fake capitalism we have been seeing in our current corrupt fiat currency system, our current centralized fiat currency system. No, it's going down. The people are waking up, period. They're waking up. Slowly, but they're waking up. But we often have to walk through darkness before we can finally see the light. Some, even though you told them this is coming, this is going to happen if this happens, I'm telling you this is going to happen, many of us knew, no, that ain't going to happen. Sometimes people have to walk through darkness before they can see the light. Meaning, sometimes they have to experience some pain before they finally say, oh, hell no, we ain't going to let that happen again, are we? Hell no, we ain't going to let that happen again. So many are going through pain right now, but we need more pain, y'all. More brokenness before finally people finally get it. That these peoples are crooks. But I'm not going to go there. I'm not going to get into that. But they do not have our interest in mind. They are very selfish people with their own interest in mind. at our expense. They see all commodities, assets on this earth right now as theirs. There's too many of us using their assets, commodities. They don't want us eating their food. They want us eating bugs. The cows are theirs. All the land is theirs. All the property is theirs. They don't want us to own anything and propagandize, gaslight people into thinking that they will be happy if everybody's brought down to the same level where everybody's time is the same value. Nobody has any incentive whatsoever to increase their personal value, their intellectual value. They want all of us dumbed down. But I'm not going to go there anymore on that. There's a hell of a lot of shit I could get into on that, but I'm not going to start with the aluminum tinfoil hat. I'm not going to go there. I've mentioned several things before in the past, but I'm not going to bother anymore. I'm just going to leave it alone. Well, I don't blame Sleepy Joe. He's a puppet. There's much, much bigger pigs to fry than Joe Biden. He's just a damn puppet. He's nothing. He's not running things. Central banks are the main culprit. Federal Reserve is a private company in which basically all of the major banks, usually it's their CEOs, that are on the board of the Federal Reserve, a private corporation that's creating money out of thin air. Well, they're creating currency out of thin air and charging all of us interest. They loan us money that they create out of thin air and then charge us interest. When we pay it back, charge us interest on something that they created out of thin air. Why can't the Treasury create the same shit out of thin air with no interest attached? But again, I'm not going to go there. I'm going to stop that. We need to get back to the analysis. All right, as far as the targets for Cardano, I've already mentioned that in the publication posted earlier today on my public profile on TradingView. Let me refresh. Right here. 30 to 23 cents, somewhere in that range. As far as, let me do S&P 500 and then I'll do Ethereum next, then we'll do S&P 500. So let's get Ethereum up. What? Okay, yeah, I remember I did that now. I remember I did that now. Just a moment. Let's delete that. Copy. Paste. Let's also remove pressure. Is my K line and D line on? Yeah, it's on the 2. It's on the 2, yeah. Alright, now let's. Okay, it was already on. Yeah, it was. Okay. That was the immediate group. Short-term group. Yep. Just making sure my indicators are correct. All right. Let me go here for a minute. All this coffee I've been drinking has me needing to pee, but I'm going to get more coffee. So let's take a break. Let's take a 15-minute break, y'all. When we get back from the 15-minute break, we will cover Ethereum in detail. We will cover S&P 500 in detail. And I might look at, not as detailed, but I'll look at maybe 3 more top 10 coins. Let's say maybe top 20. Maybe 2-3 more top 20 coins after Ethereum and S&P 500. But let's take about a 15-minute break, come back, and then we're going to be at it again here about another hour and a half to 2.5 hours. So again, let's take about a 15-minute break, and we will have another 15-minute break after that, maybe. It depends. It may only take about another hour and a half. I don't know. We'll see. But I need to pee. We'll see y'all in just a minute. Yeah, I don't like trading XRP all that much, mainly because it is more news driven, let's say. And when it makes moves, usually it's just boom, all of a sudden, overextension up or overextension down. But yeah, I haven't looked at XRP in a long time, but yeah, we'll have a go at it. We'll look at XRP to after Ethereum and S&P 500. We have approximately 6 more minutes remaining in our break. I'm back a little early. Let me copy the link to the live stream. Let's go back to Twitter. Sure, you're welcome, Colin. We have less than 3 minutes before our break is over and we get back to our analysis, where we will begin with Ethereum, then S&P 500, then XRP. The volatility is certainly a double-edged sword. The SEC backlash a few years back was a wild ride. Yeah, that was a wild ride. Saw a lot of people get wrecked. We have less than 2 minutes remaining in our break. I'm getting plenty of nicotine and coffee for another uplift to last me a little while again. think if we come down, it's at least to the blue. At least that blue diagonal trend line. Well, if it doesn't come down soon, that would be looked more at kind of like a spring. Especially if it hits the blue about right here. That would have been just below right here. But it depends on whether that 3-day candle closes. That 3-day candle closes below our low of 800 something back in June. May at least go to the purple where our candles closed and opened here. The purple diagonal trend line around our 0.5 field retrace. If we do come down with a sign of weakness in phase E as an echo, I'm looking at that purple. I think that purple, in order for it to qualify as a sign of weakness, it needs to come down here below our previous low. And don't be surprised if you see a big wick down to that, where then the candle closes around the blue. We may afterwards we see a wick down to the purple, with it maybe closing at or near the blue. And then keep going up. Why am I saying and then keep going up? Well, we've been going sideways right here for quite a while. That's kind of acting like preliminary support for a selling climax, followed by an automatic rally that should go up to or near preliminary support. That's then followed by a second test of support, followed by a second test of support after going up to preliminary support range. It's not actual support, it's preliminary. That preliminary support does not become actual support until we see a sign of strength above that preliminary support for it to then be finally considered actual support in accumulation. Could we be in accumulation right now? Sure, it's possible. It's possible, but if we're in accumulation, in my opinion, this 0.382 fib at 1,044, it needs to hold. Right? It needs to hold. That means basically that green diagonal trend line would be our diagonal support. Right now, the orange is acting like our diagonal support. But I'm thinking we can come down at least to the green. If we do that and bounce off that, come back, then that would be a good sign we're in accumulation. We're no longer in distribution. That would also mean this was not a backup last point of support. If we end up finding support right here at the 0.382 at $1,044, if we end up finding support there and we cannot fall down with a sign of weakness in phase E, that means full-fledged distribution that goes all the way from phase A to phase E. It means it was rejected, which also means all of this was our backup last point of support period in phase D, as in delta, before then transitioning into phase E with a sign of strength to go up to even higher highs. I've seen that before. Apple is a good example. You'd have to go to Apple and look years back. You would see where Apple did something similar to that, where you would have thought that this was a backup last point of support. Someone would have thought this was a backup last point of support. I say that was a backup last point of support, in my opinion. That's our backup last point of support, not this. This was our preliminary support range. But I can see where people would say this was our backup last point of support, and then we just kept on seeing stair-stepping stones all the way up to a buying climax with brief last point of support, last point of support, last point of support, and keep going to higher and highs with more and more higher highs, followed by more and more last point of support events till we got to our buying climax. That is possible. And then all of this distribution, but I'm telling you, it's possible that if we do not go substantially below this 0.382 at 1044, all of this was phase D as in delta. We would consider all of this our backup last point of support event, which means this was just an LPS, this was just an LPS, last point of support. It was not a backup last point of support. It would have meant all of this was our backup last point of support that occurs in what phase? Phase D as in delta. Which means then we should see a sign of strength it would not be considered a sign of strength until it went above 4,944, substantially above that. And then that would, if we saw that, a sign of strength, really a sign of strength would be right here. We would consider this preliminary support selling climax, automatic rally, second test of support, simple rally, test of support with no spring. Possible, you don't have to have a spring, but a test of support with no spring, then followed by sign of strength. Sign of strength, I would say it would be above 3,500. Why am I saying that? Because we went sideways for quite a while here. When we go sideways for quite a while, you should say, hey, this might be preliminary support. That would be followed by a selling climax, but really this is not a selling climax. This is a sign of weakness. A selling climax only occurs in phase E as an echo. A selling climax does not occur in phase D, only in phase E. Because sometimes full-fledged distribution that goes or initiates every single event in every single phase from phase A to phase E. Sometimes we reject phase E and end up going right back up with another sign of strength again. In that case, when you see that occur, that means that you just had a long period of backup last point of support period. I've seen that happen like in Apple as an example. There's others, but Apple is a good example. Y'all would have to look at that yourself to see what I'm talking about. We'll start looking at the indicators now and see. First, I just wanted to give a Wyckoff Method outlook as far as us knowing 100% for a fact that we will see full-fledged distribution go all the way through to a sign of weakness in phase E, which could likely be a selling climax in phase A of accumulation. Note how I have phase A in blue above phase E that's in brown. Phase E for distribution ends with a sign of weakness. Now you can have multiple signs of weakness in phase E, but how do you transition from phase D as in delta to phase E as in echo? Well, that transition is accomplished by a sign of weakness event, a significant drop down. All right, so are we going to have a sign of weakness in phase E? Are we going to transition from phase D into phase E with a sign of weakness, maybe down here near this purple diagonal trend line that's around this 0.5 fib at 646? Is it possible that we see that we get it? We don't know that yet. We're about to look at multiple time frames using Phoenix Ascending and Badass B-Bands. But will we do that? Will we see that transition to phase E, full-fledged distribution? phase E. But hey, when we go down with a sign of weakness in phase E, we need to pay attention to how we went sideways right here for a long period of time. We had multiple 3-day candles right here. Multiple 3-day candles right here. If we eventually see a sign of weakness down to this purple, let's say, don't be surprised if that's our selling climax in phase A of accumulation that should be followed by an automatic rally that comes back up to or near where we went sideways for a while, establishing preliminary support range. We should see a move back up to or near the lower boundary of that, which would be around 1200. So if we went down to around 650, let's say, don't be surprised if all of a sudden, wham, it slams back up to a little over 1,000, maybe 12. They'll have probably a lot of people buy at 1,000 because it breaks out above it to say about 1150, then it gets up to near 1200. Yeah, we're going to the moon. Then squeeze, that automatic rally is followed by a second test of support where it goes back down again to test support that then might come down to the blue diagonal trend line. May come down to the blue diagonal trend line. We'll see, it could end up being something like that. If we did come down to near 650, 646 with a sign of weakness, this in distribution, this also could be acting as a selling climax in phase A of accumulation, where we have a selling climax, automatic rally, second test of support that ends phase A. Now we transition into phase B with a simple rally where we should come back up to or near preliminary support. But we'll get into that. We also use our indicators to determine when we might see those events occur. That's what we're about to do. All right, that's the immediate group. Red and blue act like they might want to go below white level 30 again, where we might get expansion down again. You see red currently at level 33 right here, angling down in the 15-minute. That red's currently angling down. Blue's already below white level 30. Red gets below white level 30. We have a chance of falling down significantly from this white lower B band. We have a chance for expansion down in this 15-minute. Let's go to the 30-minute, 1 hour, 90-minute, 2 hour. That would be the short-term group. All of this is our short-term group. Let me increase the size again of everything a little bit so y'all can see that a little better. What time frame should we look at for Apple? This 3-day? No, Apple you actually should be in about the, let's say about the 24 to 27 day time frame. The reason I'm saying that, you can't necessarily put Bitcoin in the same category as legacy stocks that's been around for decades. Their Wyckoff accumulation and or distribution schematics play out over a much longer period of time. Usually, so I recommend going to like the 24 to 27 day time frame. It's easier to see it. Here I'm in the 22-day time frame. Here's 1981. But this is a two-tiered accumulation schematic. This was not our backup last point of support event. This was not our backup last point of support event. This was. This was our backup last point of support in phase D as in delta. Now we're in phase E. Now we're in phase E as in echo. But that's what I'm trying to get at, and this is the 22-day time frame. Each candle a period of 22 days. So all I'm trying to emphasize here is crypto, as far as time is concerned, especially with Wyckoff schematics, we would not be in the 22-day time frame right now at this stage, like we are looking at an Apple. Why? Because Bitcoin has not been around as long as Apple for us to really get a big super macro view of it like that. You know, if you were looking at Apple like in the 3-day time frame and all that, and trying to apply a Wyckoff method for the macro or super macro time frame, if you went down to the 3-day time frame, a lot of this would not make any sense to you, none whatsoever. Like, well, gosh, you know. So we're saying this was our buying climax, followed by an automatic reaction, followed by a second test of supply, followed by a simple reaction, test of supply, simple reaction, test of supply, simple reaction. Then here we would say up thrust after distribution. All of this was phase B. All of this was phase, or now we're in phase C, up thrust after distribution, followed by a last point of supply, last point of supply. Now, is this a sign of weakness? No, not really. The way we went up there. Now, is this? It would have been very difficult here. Yeah, you would have said this was distribution during that time in lower time frames, but really on a macro or super macro scale. That's what I'm trying to get at, is that Bitcoin, what we've been doing now in between 69,000 and 20,000 for the most part, actually could be a large backup last point of support event. And then we reject, you know, some pretty serious distribution coming down in phase E. We reject it and end up going up with a sign of strength, meaning it goes up above our previous highs with authority, and we transition into phase E. You know, I'm just wondering, when will Ethereum, when will Bitcoin get to a point on the macro and super macro range where we see that, where we reject a phase E as an echo and distribution in lower time frames of Wyckoff distribution? Will we reject it? Because on the macro we were actually at a point of where we were really in a backup last point of support event in phase D, and we're really not in full-fledged distribution, because this thing's getting ready to take off, and for a long period of time, going up and up and up, one stepping stone after another, like Apple did. Looking at it on the macro, I kind of get into this in a lot of detail in Wyckoff Method 2.0 education videos. Did I get into that very much using Apple and showing how we can see a rejection of full-fledged distribution, meaning we don't necessarily have to go all the way to phase E in distribution. If we don't, then that actually means that we were not in full-fledged distribution, because now the asset that we are conducting analysis on it may have been time that we really need to be paying close attention to the macro instead of the midterm or the long term. We need to be looking at the macro because we're in a major move on the macro as far as Wyckoff Method is concerned. Now, if you were using Elliott Wave Method, you might be saying, hey, we are on the verge of a historical wave 5 or a historical wave 3, which especially the 3 or wave 5, the historical, basically looking at it on the macro, that a lot of people will say, I even have a super macro group is what I call it, like even higher time frames. We're looking at it on the macro. You see that actually we're on the verge of something major movement, which we saw that happen with Apple and went up and just kept going up on the macro. Eventually Ethereum, Bitcoin, all of these assets, let's call them, they're going to mature analytically as far as the macro is concerned, looking at it, applying Wyckoff Method on the macro. Eventually we will be on a major move eventually, where it's just exponential, just begin going up. But of course many of us admit that this was manipulated. All of this 2010, after 2008 recession, where there was a mass let's say changing of hands of wealth. A lot of people got laid off in that 2008 to 2010 recession. Stock market crashed. A lot of corporations, first thing they do when their stock goes down substantially, lay off people. A lot of people lost jobs, which means they could not pay their mortgage, which means they lost their house. The house was never theirs, it was the bank's, because they had a death contract. That's what mortgage, that's the definition of mortgage, death contract in French. But now who owns the asset? Who actually really owned the asset the entire time? The banks. Who manipulated the market the entire time for that to occur? The banks. All the money that they were getting, all during this time up to this time with quantitative easing and whatnot, they borrowed money at very low interest rates. What did they do with that money? Did they loan it very much for businesses, to help businesses grow and prosper? No, because they've been destroying businesses. They don't want us to own anything. They want to destroy small business, and then use all this money that they're making right now while destroying businesses, especially with COVID. They're buying up all those assets, all those businesses, the big businesses, corporations, the big banks, central banks. They are using this worthless piece of paper or currency, they're using it to actually obtain real assets and wreck us while doing that, because they're also manipulating the markets. All the risk was on us when we got the mortgage. We were the one taking all the risk. We borrowed the money because the bank, they know in time, because they're manipulating the markets, they know in time it's highly likely you're going to lose your job, which means you're going to lose your house, which means now that house is theirs. That real asset is theirs. What really has value, that property, because that paper that was created out of thin air, how do banks create money out of thin air? Y'all know how. I'm not talking about central banks like the Federal Reserve. I'm talking about just banks. How do they create money out of thin air? Y'all know how. I'm waiting for somebody to answer in the chat. I'm waiting to see the answer in the chat. It begins with the word fractional. Fractional reserve banking. Fractional reserve banking, meaning the deposits that are deposited in the bank, now that money's theirs. It ain't the depositors. Now that money's theirs. And the central banks basically say you got to have a certain percentage in cash while all the rest can be loans or credit, let's say. At least that's the way it used to be. They lifted those rules, I want to say in 2018, I think. Sometime around that. Where now they have zero. They don't have to, as far as cash on hand in the bank or whatever. They're creating money out of thin air where they're allowed to, by law, up to a certain time, let's say 10 times, but don't be surprised if it's 100 or 1,000 times more than every dollar that's deposited in the bank. They create money via loans out of thin air. They're allowed to do so legally, so they too can create money out of thin air through fractional reserve banking, knowing that eventually they're going to own that asset that they gave you the loan for, because they're also manipulating the markets. You're likely to lose your job and lose that asset that they gave you a loan for. Now that property was theirs and they wrecked you while getting it. They had planned on wrecking you to get it, and there was no risk at all to them. None. I could get into more details, but I'm not going to get into that. This is a corrupt system that's designed to rob us of our wealth, even through inflation. The way the central banks design fiat currency, inflation is the biggest scam ever created on mankind. That is, well, I'm not going to go there. I'm not going to go there. I don't want YouTube to ban this live stream or something and give me a strike. I'm not going to go there. Alright, that was that. Let's get back to Ethereum with the indicators. Alright. We already see, and the 8 hour and the 6 hour for Ethereum looks similar to Bitcoin. We have a chance to fall. Here's the red at yellow level 50 in the 4 hour. We have a chance to fall down from the yellow B-band basis towards the white aqua lower. Do the B-bands need to expand in order for it to do that? No. Right now it's actually easy to still go sideways a while, y'all. Are we ready to expand yet in the 3 hour for Ethereum? Right now the B-bands have still been contracting, tightening up, not expanding. If we're going to see expansion, that red and blue either need to go down below yellow level 50 for stage 1 expansion down, or the red and blue, in other words, the blue could remain above yellow level 50 and then we end up turning up because the green popped back up, the red popped back up. If the red got above yellow level 50 in the 3 hour and the blue is already above yellow level 50, then we would have a chance for expansion up. But right now, we don't really see anytime here real soon that we're going to see expansion up or expansion down. Now, we still have 2.5 hours remaining in the current 3 hour candle. 2.5 hours. Do we think we're going to see expansion down in this current 3 hour candle? Right now it doesn't look like it, because normally, in most cases, most of the time, the red and the blue need to be below yellow level 50 in order for us to see expansion down. And I think there could be, here's the current candle, so one, I'm going to do it like this. Looking at this blue. One, the current one, then 1, 2, 3, possibly 4 3-hour candles, maybe 5 3-hour candles. Let's say anywhere from 3 to 5 3-hour candles before this blue has a chance of going below yellow level 50. It may take that long. If at that time when that occurs, if the green is still going down and the red is still going down, yeah, then we could see a chance, increased odds for expansion down. Some serious selling pressure, enough to increase the volume, which would also mean increase expansion of the B bands. If I add volume, you see these big old red bars right here. These 2 big red bars because of these 2 big red candles right here. Didn't we know we have increased odds of expansion down when the blue was already below yellow level 50? Let that red also get below yellow level 50. If it's not that candle, that next candle, look out. You have a chance for expansion down to begin. You have a chance for increased volume to begin. So with the indicators, you can often have a good idea of when there's an opportunity for increased volatility because of increased volume. That's the advantage of indicators. I don't need volume bars up here. If you're waiting on increased volume, you just missed it. If you're just using volume bars, you just missed that trade. Because bam, okay, we got increased volume, let's short it. And it may already be right here. That's a hard way of doing it. There's no need to have the volume up. That's my opinion. There's no need to have the volume up. By the way, source code for Phoenix Ascending. Increase, 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 increase. In this script for Phoenix Ascending, in this script, volume. Yeah. It's measuring volume. I don't need volume bars. I don't need them. Anybody want to criticize me about it? That's fine. Everybody's entitled to their opinion. They're welcome to that. But volume bars are taking up too much real estate on my chart. I don't need volume bars because, in my opinion, any information that they provide as far as when to open and or close a long or short position, they're not helping me. They're just not. Yeah, they use the people's deposit for it. Ethereum 2-hour. We're about to get a new 2-hour in 21 minutes. At which point the blue may be below white level 30 along with the red. Well, what about the 90-minute? Is its red below white level 30? Actually, its red is still angled up. It's not, it currently doesn't look like it's ready to go down below white level 30 to increase the odds of going down from the white lower B band. Same thing here for the red in the 1 hour. It's at yellow level 50. It's not down here at white level 30, about to go below white level 30. So we may still be going sideways here for a little while. And the reason I'm saying that too, because here's the price action right at the yellow B-band basis. We're not quite ready to fall down from the yellow B-band basis towards the white lower B-band, and then the candle close at least around the white lower B-band. See, it hasn't closed down here at the white lower B-band in the 6 hour, because that red line is not really down there, at least below yellow level 50, to justify us going down below the yellow B-band basis to the white lower B-band and stay down there and get some expansion going down there. If we want to see a real significant move to the downside with a chance of a sustained period of selling pressure continuing going down, we need both the red and that blue to go below yellow level 50. Well, that's at least 1, 2, possibly 3 more 6 hour candles. Several 8 hour candles to get both the red and the blue below yellow level 50. So we could still be sideways here for a while, y'all. We may wick down below the B-band basis like we did right here. How we wick below it, but look how it closed above the basis. Why? The red is way up here above white level 70. Red wasn't way down here at white level 30, meaning the price mean was not down here at white level 30 in order for the candle to have increased odds of closing down here at white lower B-band. That's the reason it bounced right back up. We were overextended, and we're still overextended down just a little bit because the red's right at white level 70, but the price is not right here at the white upper B-band. We're down below it. We're down here near the basis. So we're currently overextended. Will it continue to overextend down with increased volume, expansion down? Well, that remains to be seen. We'd have to look at these lower time frames. This was the 8 hour. We'd have to look at these lower time frames, such as the 2 hour, the 3 hour, the 1 hour, 90 minute, 30 minute. It takes time for this to play out. And like I said, the number of 3 hour candles, the number of 6 hour candles, 8 hour candles that we may have to see pass before we have increased odds of a significant move down. We may still have a little while yet to wait for that. May still have a little while yet to wait for that in the 6 hour, 8 hour, 3 hour. So especially that 3 hour with that blue, I told you it may be anywhere from 3 to 5 3 hour candles before we potentially see a significant move to the downside with expansion. These B-bands are still contracting, not expanding. It's too hard for them to expand yet in the 3 hour. Why? Because the red and the blue both, either 3 to 5 3 hour candles from now, 3 to 5 3 hour candles from now, then both the red and the blue might be below yellow level 50 to have a chance for a significant move with expansion to the downside to begin. So right now it looks like it's still potentially more sideways here for a little while. It's not ready for a real significant move to the downside just yet, in my opinion. Does that mean that we can't all of a sudden see wham down again, but then with a wick because it closed back up high again? Yeah, that's possible again, over and over. They like doing that, especially on margin pairs. You know how margin pairs, you see more significant wicks than you do on spot trading pairs. See a lot more wicks on margin trading pairs than you do on spot trading pairs. I'm looking at the 12-hour for Ethereum at the moment. Here's the 24-hour. Red's right here at yellow, level 50. Yellow B-band basis. It's, gosh. And I really hate it when both the red and the blue are right at overlapping level 50, yellow B-band basis. Because you're subject to get expansion up or expansion down. Right now, I would say with the green currently going down, you would think it would be easier for us to get expansion down at the moment than expansion up. Because if that green's going down, the energy's coming down. We know in order for upward pressure to continue, like right here, when that energy turned down, that price action is coming down. It's not going up. Why? Is that red above yellow level 50 right there? No. So the very moment that energy is coming down, if that red's not above yellow level 50, it's coming down. It's coming down. Now, yeah, we wicked down to the white lower B-band, but where did it close? It closed right at the yellow B-band basis. Actually, just a little bit below it. It closed just a little bit below the yellow B-band basis. Why? Because the red is just a little below yellow level 50. That's why. It was right on line with the price mean, with the red line. The red line was saying, hey, just below the yellow. So we closed just below the yellow when we came down. Because again, when the energy turns down, if that red's not above yellow level 50, it's hard for upward pressure to continue. The price action is likely to begin going down. It's likely to begin going down. Now, right now, I would say if we were to see expansion in this 24-hour time frame, it's easier to get expansion down than expansion up at the moment. But what if the next candle, all of a sudden the green turns up? And now the red and blue are both above yellow level 50. Well, now we have a chance for expansion up. In that case, if the next 24-hour candle we see that happen, well, that's possible to occur. There's a chance for that to occur, where we see one more last point of supply event where we go up to or near the white aqua upper B bands, where we go up to or near the white aqua upper B bands in the 2-day. However, here's what has me staying in reserve for Ethereum, as far as to say that, man, I have a hard time seeing us going up to that white aqua upper B band in the 2-day time frame. I have a hard time seeing that. At least for this 2-day candle, and possibly even the next 2-day candle. Why? Yeah, the red's above white level 30 in the 3-day, but that blue is still pretty low here in the 3-day. Well, actually, there's a chance, looking at this 4-day, the blue's already above white level 30. Now the red in the 4-day, the next 4-day candle, the red may go above white level 30, increasing the odds of us going up from the white lower B band towards the yellow B band basis at around just shy of 1500, 1480, let's say. There's a chance for that looking at the 4-day. Well, what about the 5-day? Hell no. With this red way below white level 30, 3 days, 21 hours. Man, that blue is about to go below yellow level 50. When you see a lot of mix like this, hey, we might go up. Hey, it looks like we're going to go down. Hey, we might go up. Damn, this looks like we're about to go down the next weekly candle. When you see a lot of mix like that, that often means sideways. Still sideways here for a bit. We need that green to come down in the 3-day. The red making contact with the green while going down, indicating downward pressure, and then the red falls back below white level 30 along with the blue, to see another chance for expansion down, just like right here. The red went below white level 30 right here, while the green was going down. The blue also went below white level 30 from here to here. They both did. The green going down. We had a move down towards the aqua lower B band. You see the green come down towards aqua level 10, but we did not see stage 2 expansion down. It was rejected. The green came right back up. The next 3-day candle came right back up again. How would you know it come back up again? Well, if you were high time frame scalping using lower time frames in the short term group, and you're also using the 12-hour, 24-hour, and 2-day, sometimes the 3-day, using those as well, often to determine ceiling of resistance or our support floor of support, or ceiling of resistance, where we could go up to this, but it's going to be hard to go up above that because of this. That's why we're using the high time frames often a lot. Gosh, let's go to the midterm group for a minute. That 8-day acts like, see how the red and blue are both above white level 30? The green's currently going up. That increases the odds of at least going to the basis, but hey, it may have to wait a little bit, because look at the 10-day. Is this red ready to go up above white level 30 in the 10-day to increase the odds of going up to the yellow level 50, which means to increase the odds of going up to the yellow B-band basis at around 1640? You know, that red in that 3-day doesn't look like it's ready to do that. It really doesn't. The way that 2-week, excuse me, that's not the 3, this is the 10-day. In the 10-day, we still have 8 days, 21 hours, so almost 9 days remaining in this 10-day candle. So maybe the next 10-day candle, is this red just going to all of a sudden, make a U-turn and turn right back up? At least for the next 8 days and 21 hours, I don't see us going up from this white lower B-band towards the yellow B-band basis with authority, which is currently at 1700. This 10-day candle, are we going up to that yellow B-band basis? If we did, is it going to stay up there? Is this red near yellow level 50? No. Since it's not, if we did go up there, we are overextended. Get ready to short the heck out of that, because we're overextended, if you saw that. But in order to see that coming in the 10-day, you need to be in lower time frames. And right now in the lower time frames, I do not see us necessarily going up with authority yet. But again, looking at that 4-day and then this 8-day, that 9-day, the way the red and blue are both above white level 30 in the 8-day and the 9-day, it's still kind of looking like more sideways at the moment to me, because we know we're going to have a hard time going up from this white lower B-band to the B-band basis with authority, because of how this red is still angled downward below white level 30. It doesn't look like it's ready to go up from white level 30, for us to go up with authority from the white lower B-band to the basis in the 10-day time frame. And we still have 8 days, 21 hours remaining in the current 10-day candle. So I have a hard time seeing over the next 8 days, 21 hours, us going up to, let's say, 1700 right now. This current 10-day candle that has 8 days, 21 hours, I have a hard time seeing us shoot up to 1700 right now. And then stay up there and keep going. How are we going to keep going up with expansion if this red and blue are nowhere near yellow level 50 to justify us seeing expansion up? moon time. You know, we're nowhere near that yet. We're just not. When looking at the 10-day, when that red and blue get above yellow level 50, then we can begin to see a serious period of time of staying above the yellow B-band basis, and let that red get above white level 70. If we can get above white level 70 with the red, we're going up from the white upper B-band. We're going up from it. That's stage 2 expansion up. Stage 3 expansion up was rejected. The green came down when the red and blue got above level 80. But we got stage 3 expansion up here. Then we got stage 4 expansion up because we got above level 90. Then we got stage 5 expansion up because we went above level 100. You see, the B-bands kept expanding, opening up. When the red then fell down from level 100, yes, the green came down, but do you think that we're going to go down from in this 10-day time frame? When it came down right here, green came down, the red is just now going below this. Do you think over this 10-day candle that it's going to close below that white lower B-band? Excuse me. Do you think it's going to close below this white upper B-band? Close. Now, it may wick down to it, but is it going to close below it? With that red up here, nowhere near white level 70, that candle, nowhere near white level 70, we may come down to that, but man, that's not a bad place to put a buy order in, where if we did wick down to it, if we overextended down to it, we're likely to have support there for a while. Now, when that red does get below white level 70, doesn't that increase the odds of a candle closing, going down from the white upper B-band and closing substantially below the white upper B-band? As the red gets down closer here to yellow level 50, see how the price action closes, hangs out around yellow B-band basis? So in order for us to go up from the white lower B-band in the 10-day time frame, I know we've been hanging out around it, but in order for us to go up from that with authority, reversal, I don't see that occurring this candle for sure. And we still have 8 days, 21 hours remaining in this candle. I'm sorry, but a long position has not even entered my mind. As far as a swing trade now, I'm not talking about a scalp. I'm talking about a swing trade that lasts several days, sometimes weeks. I'm not even thinking about a long position just yet for a swing trade. No. Especially when looking at that 10-day, a long, for a sustained period of time. I'm not having to sweat emotionally. No. Each one of these 10-day candles, each one of them, as it was coming in, especially when that red went below yellow level 50, that triggers downward pressure that lasts for how long? Until the white energy comes back up to level 50. As far as a swing trade is concerned, long positions are not in my vocabulary during that time. If I'm getting ready to do a swing trade using the 10-day time frame, if that's all I used, and you could if you wanted to, I don't recommend it, but if you did, as far as a swing trade goes, where you just want to open a trade and not have to worry about it that much, not have to sweat it much for a while, well, I would wait until that red's getting ready to go above white level 30 in that 10-day time frame, if that's all you have time to trade for. You're only interested in swing trading. But again, I don't recommend just using the 10-day time frame. You need to be using multiple time frames that should line up. The planets should align in that set of time frames, and I'm going to be getting into those sets of time frames, knowing what sets to use at any given time for a long or a short position. Whether you're high time frame scalping, small swing trading, or large swing trading. Some people only care to do large swing trading. Then there's some that only care to invest, where they're using even higher time frames. I'm thinking this is still sideways for a while, y'all. At best. Sideways at best. Downward at worst. I do not see a reversal to the upside just yet. If we did get a move, a significant move to the upside all of a sudden, especially over the next 8 days, don't we have 8 days remaining in this 10-day candle? Yes. If we all of a sudden got a significant move to the upside near that yellow B-band basis, and that red, and if we did that, this candle, and that red is way down here, it's nowhere near ready to go up above yellow level 50 to justify the price action going up from that white, from this yellow B-band basis to the white upper B-band. If that red is nowhere near that yellow to justify the price going up to that white aqua upper, if we all of a sudden went up to that yellow B-band basis, you should be licking your chops, getting ready to short the heck out of that. If you saw a move all of a sudden, for whatever reason, go up to near 1,700, 1,600, just all of a sudden over the next 8 days, if we saw that, I would get ready to short the heck out of that, because we're overextended up if you saw that when looking at it in the 10-day, because that red is nowhere near yellow level 50 to justify, in other words, to be the price mean, to justify the price action staying there. Like here, the red was near just below yellow level 50, and the price action was just below yellow B-band basis. But hey, remember, if that energy falls down, we had upward buying pressure. If that white energy then turns down, are we going to keep having upward buying pressure if that red is not above yellow level 50? No. That red has to be above yellow level 50 in order for upward pressure to continue, despite the fact that the white energy is falling, like right here. Even though the white energy was falling, wasn't the price action rising? Yes, it was. Why? Because the red was above yellow level 50. That's why. But hey, if that red is not above yellow level 50, the very moment that energy turns down, that price action is coming down. Most certainly is. Speaking of which, I'm going to add time. I'm just reading through the chat at the moment. Let's see. I want to look a little bit more at a few other things. Don't let this green currently turned up in the 11-day, the 12-day, the 13-day, the green currently turned up. Don't necessarily let that fool you. We still have 7 days remaining in the 13-day before the next 13-day candle begins. We have 7 days, almost 8 days. Don't be surprised if this 13-day candle closes with that green angled down, not up. Right now, that green, all these indicators are fluctuating in this 13-day, in this 12-day, in this 11-day. They're fluctuating right now. The candles have not closed yet. Example. This is the immediate group. 5 second, 15 second, 30 second, 1 minute, 2 minute, 4 minute, 8 minute, 15 minute. All right, looking at this 15 second, you see how that green is moving up and down? Still moving up and down. 3, 2, 1, close. Now the next candle. See, now it's going up, but that green was fluctuating up and down until that candle closes, just like how it's fluctuating now in that 15 second time frame. It's going to keep fluctuating until it closes. All right, it doesn't matter what time frame it is. Don't assume, from what we were seeing with this green currently angled up in the 11 day, 12 day, 13 day, don't assume it's going to close like that. Say, hey, we're making a reversal, it's turning up now. No, you don't know that. That candle has not closed yet. So the odds of us attempting a potential reversal where that red might have a chance to just all of a sudden turn up on a dime, to go up for the price mean, to go up from the white lower to the basis, to go up from the white lower to the basis, to justify us going up to that. I can't say that right now. This candle, I need to see that next candle. Right now it's looking like the basis may come down to meet us rather than us going up to meet the basis. I say again, right now it looks like the basis is coming down to meet us rather than us going up to meet the basis. That's the way it looks at the moment. But you know, there's a chance to go up to meet the basis. There's a chance, but it better start soon. We see the green currently coming up in the 4 day. It's currently coming up in the 8 day. That's 1475 in the 8 day. The basis, 1475. 1475. Remember that. Remember that. 1475. 5 days, 4 days remaining, 5 days remaining. Can we go up from the white lower B band towards the yellow B band basis? I'm looking at the red line. You know, the red is going up from the white lower. The price mean to go up from the white lower to the basis, you know, and stay at the basis in that 9 day time frame. We still have 5 days, 20 hours remaining in the current, but if we were to go up to near 1500 during this current 9 day candle, if we were to go up to the yellow B band basis, we would currently be overextended up at that moment, but there would also be a chance to continue going up to the white aqua upper. That's at just shy of 2000. All right, now let's check for a ceiling of resistance. That would be right at 2000, right? When looking at the 9 day yellow, if we went up to the white aqua upper, that's currently right just shy of 2000. If we all of a sudden shot up to that, to the white aqua upper, then over the next 18 days after the current 5 days, after this current candle, guys, just looking at that red in that 2 week though, the green currently coming down, 4 days, 20 hours remaining. We may have to wait 4 days, 20 hours, see the next 2 week candle where the green's coming up in order for us to still stay right around the white lower. Going up from that white lower towards the basis, we just don't see that yet. Over the next 4 days, 20 hours, I'm just not seeing that yet. Let me keep going higher for a minute before we draw conclusions. I'm still looking for ceiling of resistance. One time frame after another, going higher and higher and higher. I'm looking at ceiling of resistance. Can we go up from the white lower B band here in the 20 day? Is the green trying to even come up yet? Is the red about to go above white level 30? Well, the white lower B band is 1527, 1527. The white lower B band is currently. over the next 8 days, 20 hours, that white lower B band is resistance. The next 20-day candle, will the green turn up and the red then begin to go up above white level 30 to justify us going up from the white lower B band towards the yellow B band basis? We'll see. There's the 15-day. Blue's already below white level 30. The next 15-day candle, the red, is subject to be going below white level 30. That's 8 days, 20 hours from now. Will we begin to fall down from the white lower B band? Because the red is falling down below white level 30. Will we begin to see that in the next 15-day candle that begins 8 days, 20 hours from now? That remains to be seen. Once that candle begins and these indicators move in the 15-day, you need to be looking closely in lower time frames. I'm talking to the swing trader that's using this 15-day time frame along with other time frames in this long-term group, along with the mid-term group. I'm talking about the major swing trader who really doesn't trade that often at all. They're mainly looking at for major swings instead of small swings. There is a difference, and I can explain that in Wyckoff Method. But I do that in some educational videos on the website. I'm not going to take the time to do that now here. 22-day. By the way, I'm in the macro group now. I went from the long-term group to the macro group. I see in this 25-day us going down from the white lower B band. With stage 2 expansion, we see stage 2 expansion of the B bands. Does that mean the price action must go down with that expansion? No, it does not mean the price action must go down with it. But do we see a reversal to the upside anytime soon? Over the 8 days, 20 hours. There goes that number again. 8 days, 20 hours. So we'll see the next 25-day candle to see if we can get stage 2 expansion of the B bands, increasing odds of selling pressure. Does that mean we must see significant sell-up pressure and that the price action must fall down significantly? No. But what it does mean, we have significant odds of an increase in selling pressure. We most certainly do. So I would have to say, at least over the next 8 days, 20 hours, it looks like sideways at best, downward at worst. And when going sideways, that white lower B band is resistance, because is this green even coming up at the moment? Yes, the red's below white level 30 and the price action is below the white lower B band. But us going up above that white lower B band, then over the next 8 days, the odds of us doing that above $1,672, the odds of us doing that, going up from that just all of a sudden, no, it's not happening. Not the next 8 days, 20 hours. And just the odds of that occurring is very slim. I'm not going to say it will not happen, but I'm going to say slim and none. Slim and one. Slim and one. The odds are very slim. I'm not going to say slim and none, but slim and one. And the way that 4-week time frame looks, man, still have 18 days, 20 hours remaining, y'all. And the odds of us going down towards this aqua lower B band at $950, goodness, looking pretty rough in that 4-week. At 24-day, yeah, we're still below the white lower B band, and red is just below white level 30. We still have 20 days and 20 hours remaining in the current 24-day candle. 18 days, 20 hours remaining in the current 4-week candle. I do not have a long position in my vocabulary yet. In these indicators, I'm talking about to the swing trade, the major swing trader. No, I don't see it yet. It's just not there. It's just not there. Super macro. We do not have enough data for the blue LSMA. You see in the 6-week time frame, the blue LSMA is there. Do we have a blue LSMA? Do we have a blue least squared moving average? Do we see that in the 8-week, the 10-week, the 12-week? No, there's not enough historical data for it to populate. There's just not enough there yet for these higher time frames. Five-week. Red's already below yellow level 50. If the blue gets below yellow level 50, that increases the odds for stage 1 expansion down. We still have 25 days, 20 hours remaining in the current 5-week candle. Green's currently going down and the red is right at white level 30, and the price action is just below white lower B band. It's not right at white lower B band. But K line of the stochastic is below the D line. Green's currently angled down. Red is almost making contact with the green while going down to indicate downward pressure. But as far as us going up significantly over the next 25 days and 20 hours, right now we just don't see that yet. When looking at the 5-week time frame, do we even see it in the 2-week time frame right here? No. That red goes below white level 30 the next 2-week candle, then we're subject to begin going down from the white lower B band towards the aqua lower B band, because look at the green already right at aqua level 10, the blue already right at aqua level 10. You know, the next candle, man, they keep falling. That red comes in. Yeah, we can definitely fall down to near or below the aqua lower B band in the 2-week time frame. That's currently at $888. The next candle is likely to be around $860, $850, because that aqua lower B band is still falling. So the next candle may be around $850 instead of $888. Yeah, again, especially to the swing trader, I would not feel very good emotionally. My nerves would be a wreck if I was to open a long position right now. Certainly would. I'm talking about like at 3x, the large swing trader who may do like a 3x, no more than 5x, but using quite a large amount in their position. They intend on keeping it open quite a while. They're not really worried about getting liquidated because it's a rather large position that's only at 3x. It would have to move a lot to liquidate it. Would I even attempt doing that right now, opening a long position for that with a lot of money on a 3x position? Would I attempt that right now? No, not alone, not right now. These greens need to turn around in these higher time frames in the super macro group. You know, with that red and blue getting ready to go up above white level 30 in the 4-week to justify us going up from the white lower B band towards the basis. You know, in other words, indicating a reversal from this long-term or macro selling pressure to macro buying pressure. You know, especially when talking to the investor that would be using these time frames, the 4-week, the 5-week, the long-term investor. We're just not seeing that yet. Does that mean I'm discouraging you from dollar cost averaging at the moment? No. No, I'm not doing that, but I am saying this. I wouldn't get carried away with a whole lot of buying just yet. I wouldn't. But, that's me, and that's my opinion. Right now, I have to respect what I'm seeing here with this, with a chance for stage 1 expansion down in the 5-week, for us to continue with stage 2 expansion down, because red and blue are both below white level 30 in the 4-week. What, are they supposed to all of a sudden just turn on a dime, begin going up? We begin going up for a sustained period of time from the white lower to the basis. Yet not with that red, where it is right now currently. We still have 18 days, 20 hours remaining in the current 4-week candle. We're just not seeing that yet. All right, let's go back to lower time frames now that we looked at higher time frames. Sideways. That's 12 hour and 24 hour. We're still seeing sideways. Let's see what happens this next 2-day candle, if this green's coming down the next 2-day candle. Because like in this 2-day, it basically ended up where the yellow B-band basis came down to us rather than us going up to meet that yellow B-band basis. Is that still going to occur one time frame after the other? In other words, this 2-day time frame is doing that. Now, is then the 3-day time frame going to do that? Will the green be coming down the next 3-day candle that begins 2 days and 20 hours from now? I don't know. Let's go to the short-term group again, see if we've had any change since I began talking. We've had a new 4-hour begin. The way that this is indicating a chance for going. Are we going to see a significant expansion up? If we turned up, will we get a significant expansion up? This 4-hour or the next 4-hour? I don't see that red line turning on a dime to go above yellow level 50 the next candle to increase the odds of expansion up, going up with authority. I'm just not seeing that in the 4-hour. It's looking like a death triangle in the 3-hour. I say again, looks like a death, as in dying, death triangle in the 3-hour. It's not the best looking triangle, but it is. It's a death triangle. It looks like, when I say triangle, let's see. There's a triangle. So the green going up, coming right back down, and the blue. Red's already below yellow level 50. Now when the blue gets below yellow level 50, death triangle, but usually a real good looking one, the green went all the way up to the blue and then turns down immediately after, like the green bounces off the blue and comes right back down. That would be a perfect looking death triangle. Then you also have what I call a life triangle. You also have those, which is basically that in reverse. When I say that in reverse, well, let's invert and invert, where the triangle is pointing up. Excuse me. A life triangle. Red's already above yellow level 50 when the blue gets above it, but usually a real perfect life triangle. The green came down right at pretty close to the blue and then bounced off of it, came back up, and then the blue went above yellow level 50. That would be what I call a life triangle if we saw that. Yeah, the 24-hour. Yeah, that's a decent look of a potential death triangle, but when looking at it right here, yeah, the red's below white level 70. Green came down. Yeah, we came down from the white upper B band. Will that green continue coming down? Will we continue having selling pressure in the 12-hour? Yeah, it's still kind of, I'm still seeing kind of more sideways at the moment, like what we've been doing here pretty good while in the 3-day, the 2-day, looking at it on that scale, 3-day scale and the 2-day scale. Of course, it doesn't look very sideways when looking in the 12-hour or the 24-hour. It doesn't really look sideways like it looks in the 2-day, especially the 3-day and the 4-day. That really is kind of ranged sideways. And again, the time to open the short, if you were in a short position, was a long time ago, when that red in the 3-hour was getting ready to go below white level 70, to indicate we can fall down from the white upper B band towards the basis. But we know if we came down to that basis, if we're going to go down from that basis, that yellow B band basis, if we're going to go down from it for a sustained period of time, not only does the red need to go down below yellow level 50, we also need the blue to go down. So right now, technically, we are overextended down at the moment. Not real bad. You know, the red's just below the white lower B band, but the red is right at white level 30. It hasn't fallen below, but with that green coming down in that 3-hour, there's a chance of going down significantly soon, but it still may take at least one, if not two more 3-hour candles after the current 3-hour candle. Alright, this is the short-term group. Let's go to ETH BTC. Short-term and near-term group. ETH BTC short-term group right here. Man, we have a chance for expansion down in the 4-hour. Will we get it? Well, it doesn't look like much odds for expansion down in the 6-hour, because we want to get expansion down, both the red and the blue. In most cases, both of them need to fall below yellow level 50. Well, that's still at least 2, if not 5, 6-hour candles from now, if we're to see a chance for expansion down.
In fact, we have more of a chance for expansion up in the 6 hour than we do for expansion down, because the red and blue are still above yellow level 50, just like they are in the 8 hour. If that green all of a sudden shot up, the next 8 hour candle or the next 8 hour candle after that, since the red and blue are above yellow level 50, in that case there would be a chance for expansion up. Let's go to the near term group. Man, that red's low in the 5 day. It's low in the 6 day. It's low in the weekly. It looks more like the basis is coming down to meet the price action rather than the price action going up to meet the basis. It couldn't go up here. The very moment that energy turns down, that price action is coming down if that red is not above yellow level 50. Also, we knew the white lower B band was likely to act as resistance in that 2 day. We knew that we were unlikely to go up from the white lower B band towards the basis right there, because the red is not on the verge of going above white level 30. The very moment that energy turns down, that price action is turning down. Man, I'm still thinking sideways here for a while with Ethereum, Bitcoin as well. When looking at the 2 day and 3 day, I know it doesn't look like sideways like in the 12 hour. That doesn't look like sideways. I'm talking about for the near to mid-term when looking at the 2 and 3 day. Looks like it's still ranging sideways here for a while. We'd have to see that green turn. Bottom line, if we want to see energy with a significant reversal that to the upside that lasts for a sustained period of time, this red and blue, not just the red and blue, need to get above yellow level 50 in that 3 day. It'd be a long time yet from doing that. Right now, I do not see us going up from the white lower B band to the basis with authority, at least over the next 2 days and 20 hours. That red is still below white level 30. I know the price is just above the white lower B band. It's not below white lower B band the way we see the red currently in Phoenix. That's because the green is overextended above the red. The green reflects the price action where it is in relation to the red line, which is the price mean. Currently overextended above, overextended up above the red price mean. Red price mean is in between it, so actually we're right at it though. We do not have, we wicked up above that, but we're going to have a hard time going up above the basis to the white aqua upper if that red in the 2 day is not on the verge of going up above yellow level 50 to increase the odds of going up above the yellow B band basis towards the white aqua upper. We just don't see that yet in the 2 day. The daily, the way the green's currently angled down in the 12 hour as well, it looks more like down instead of up. Could be on the menu. Down instead of up. Now, are we going down from this white lower B band in the 24 hour? Are we going down from that for a sustained period of time? Well, that red in the 24 hour needs to be on the verge of going below white level 30. Needs to be on the verge of going below that in order to justify us going down from the white lower B band and continue going down for a sustained period of time, which may result in expansion down. That red in the 24 hour, if we were to begin turning down and keep going down, that would take several days, because this is the 24 hour time frame. Each candle a period of 24 hours, 1 day. That would potentially take several days. even when looking at the 12-hour. Both the red and blue need to get below yellow level 50 to increase the odds of expansion down, where we go down significantly with authority, and that's still several 12-hour candles away if we are about to see significant expansion down. If we're in the works of doing that, it's going to take several more 12-hour candles before we even see the odds increase of us potentially doing that. Therefore, I have to conclude at the moment that we're still sideways between the yellow B-band basis and the white aqua upper B-bands in the 12-hour. Is this red ready to go below yellow level 50 to justify us going down below the yellow B-band basis and then remain below the yellow B-band basis for a sustained period of time? That red is not down here below yellow level 50 to justify us closing below the yellow B-band basis like we were right here. See, the red was below yellow level 50. So we ended up closing when the green came back down. We ended up closing below the yellow B-band basis. Here, did we close below the yellow B-band basis? Even though the price action wicked down below it, the reason we're seeing that wick and closed above the yellow B-band basis is because the red was not on the verge of going below the yellow level 50. So even though we went down below the yellow B-band basis, we ended up closing above it because the red line was nowhere near yellow level 50, to justify us closing below the yellow B-band basis and continue going down. The red line just wasn't ready yet in that 12-hour. So I'm still seeing sideways at best, downward at worst. Even for Ethereum, sideways where, within what range? Well, I don't really care to give the price for Ethereum Bitcoin. But right now, y'all can see the price. The price range is here. 0.0666 aqua lower, 0.0666 to the aqua upper, 0.0682. I'd say that's our range at the moment, and that range is only about 2.5%. 2.5%. How do I know that? 1.5% between this white and that white, 0.5 between this white and aqua, and 0.5 between this white and aqua. 0.5 and 0.5 is 1, plus this 1.5 equals 2.5%. We have about a 2.5% trading range at the moment. But actually it's a little tighter. It really looks more like between the yellow B-band basis and the aqua upper. That red is not ready to fall below yellow level 50 to justify the price action staying below the yellow B-band basis for a sustained period of time in the 12-hour. It's still looking more like sideways here for a bit. Sideways at best, downward at worst when looking at the 12-hour and 24-hour. The 2-day and 3-day would have us think, man, there's a chance to go up towards the basis in the 3-day, for example. There's a chance to go up to the basis. This 3-day candle with 2 days, 20 hours remaining, this 3-day candle, no. We're already above the white lower B-band, but to go up is just not quite ready yet. This 3-day candle. The next 3-day candle, maybe. You'd need to be looking in the short-term group to determine the odds or chance of us going up to meet the basis. It may end up where the basis is coming down to meet us, like we did in the 2-day. We didn't go up to the basis. The basis came down to meet us. Even though the red finally got above white level 30 right here, with the green going up, finally. Well, by that time it's too late. That right here The reason we didn't go up to the basis, the red was nowhere near ready to go above white level 30 to justify going up from the white lower B band to the basis right here. We couldn't go up to meet the basis. It took a while for us to finally meet the basis, but we met it by the basis coming down to meet us rather than us going up to meet the basis, period, in that 2-day time frame. Are we about to reverse that, where we can finally begin going up in this 2-day time frame? Well, that still remains to be seen. That remains to be seen just yet. We need 2 days and 20 hours to pass, preferably 4 days and 20 hours to pass. That's how much remains in the weekly. Because I'm not going to assume this green's going to close angled up. It could be flat by the time this weekly candle closes, because the price action 4 days, 20 hours from now might begin going down below the yellow B-band basis again. Right now we've been hanging out right at the basis in the weekly, yet the red is at level 30, way below yellow level 50. But is the price action well below the yellow B-band basis, even though the red is below yellow level 50? Right now the indicators, the price mean is saying, hey, with that red right here, white level 30 in the weekly, let me increase this. White level 30. That's right here at this aqua diagonal trend line. Resistance. Resistance. Fell down to the green. So the red, the price mean right at white level 30, is the price action right at the white lower B band. No. Hasn't even come down there. Even though the green came down below white level 30, the price action did not come down below or to or below white lower B band. So again, that's a prime example that even though you see that occur, saying, hey, we have increased odds of going down from the yellow B band basis towards the white lower B band, yet it did not occur. It did not occur. In that case, you would have been sweating that short for quite some time. If you're a swing trader in the weekly, you would have been sweating that out for quite some time. But you know, during that time, if you opened a short position, then you would say sideways at worst, and that was the case, or downward at best. If you had opened a short position as a swing trader using the weekly time frame, you opened that, it may have been 3x, very low leverage with a large position. You would have known, hey, we have increased odds to go down to the white lower, but we didn't go down to it. But did we go up from the basis to the white upper? No, because you knew by the indicators at that time that we have increased odds of going down from the yellow B band basis towards the white lower, but yet we didn't do it. So when opening a short position, you're saying sideways at worst, downward at best. If you opened a long, you would say sideways at worst, upward at best. If open a short, you're saying sideways at worst, downward at best. I just don't see that red line turning on a dime to go back up from this basis to the white aqua upper, where we go up for a sustained period of time, with that red way below yellow level 50. I know we're right at the basis. The red, the price mean, is indicating that we should be down at the white lower. That's 0.059, but we're not there. Again, reminder, this is Ethereum Bitcoin. This is not Ethereum US dollar. But right now we see significant odds to go down significantly. In order for Ethereum Bitcoin to go down, that means Ethereum US dollar has to go down more than Bitcoin US dollar percentage wise. Percentage wise, Ethereum US dollar needs to go down more percentage wise than Bitcoin US dollar in order for Ethereum Bitcoin to go down. So do keep that in mind. Doesn't that mean that if you had a short in mind, you would rather use the Ethereum US dollar pair when opening that short rather than the Ethereum Bitcoin pair? If you were shorting and you're wanting to increase your value or your capital in US dollars, if your goal is to increase your capital in US dollars, well, you are looking to short Ethereum US dollar, since it would have to go down more percentage wise than Bitcoin US dollar to make Ethereum Bitcoin go down. Because think about it, in order for Ethereum Bitcoin to go down, Ethereum US dollar has to go down more percentage wise than Bitcoin US dollar. So think about it. Let's say Bitcoin US dollar, the indicators show going down. Ethereum US dollar, indicators show going down. Ethereum Bitcoin, indicators show going down. All of them. Bitcoin US dollar, Ethereum US dollar, and Ethereum Bitcoin. All of them. Let's say the indicators are showing it's going down. Common sense should tell us, as far as trying to decide what pair am I going to trade, if my main focus is to increase my USD capital. If that's my main focus, then I need to be trading Ethereum US dollar, because if the indicators on all three pairs are showing going down, don't we know that Ethereum US dollar has to go down more than Bitcoin US dollar in order for Ethereum Bitcoin to go down? Has to. In other words, let's say Bitcoin US dollar goes down 5%. If Ethereum US dollar also went down 5%, where does that put Ethereum Bitcoin? 0. It just went sideways. Nothing. Nothing. What has Ethereum Bitcoin been doing? Sideways. Nothing. Why? Because Ethereum US dollar and Bitcoin US dollar, each time they've gone down the same percentage. The same percentage. But I know if I'm wanting to open a short, I would rather open a short in Ethereum US dollar. Why? Because instead of Bitcoin US dollar going down 5% and Ethereum going down 5%, for Ethereum Bitcoin to be 0 sideways, if Ethereum Bitcoin is going to go down, I would need to see Bitcoin US dollar go down 5%, and then let's say Ethereum US dollar go down 10%. Well, then Ethereum Bitcoin can go down, and it would go down how much? 5%. If Bitcoin US dollar went down 5% and Ethereum US dollar went down 15%, now that means Ethereum Bitcoin can go down 10%. The difference. If Bitcoin US dollar went down 5%, the Ethereum US dollar went down 15%, that means Ethereum Bitcoin should go down 10%. But now if your focus is on increasing your USD capital, the best trade would have been Ethereum US dollar, not Ethereum Bitcoin. Not Ethereum Bitcoin, but Ethereum US dollar. If your goal is to increase your USD capital. Because common sense would tell us Ethereum US dollar would have to go down more percentage-wise than Bitcoin US dollar in order for Ethereum Bitcoin pair to go down. So I'm not going to trade Bitcoin US dollar if my focus is to increase my USD capital. I am not going to trade Bitcoin US dollar as far as open or short for Bitcoin US dollar. I'm not going to do that if the indicators are showing that Ethereum Bitcoin looks like we can go down. Ethereum Bitcoin looks like we could go down. I know it hasn't yet, but Ethereum Bitcoin shows that we can go down. Common sense always tells me in order for it to go down, any altcoin Bitcoin pair, whether it's Ethereum Bitcoin, ADA Bitcoin, Link Bitcoin, doesn't matter. In order for that altcoin Bitcoin pair to go down, that means that altcoin USD pair has to go down more percentage-wise than Bitcoin USD. Has to. In order for that altcoin Bitcoin pair to even move down. So if my focus is to increase my USD capital, when shorting, you're not interested in shorting the altcoin Bitcoin pair because the altcoin USD pair is going to move more, especially if Bitcoin USD indicators are showing down. Altcoin USD indicators showing down. Altcoin Bitcoin pairs indicators showing down. All of them showing down. Well, yeah, I want to open a short, but the best one to open a short for would be the altcoin USD pair. It has to move more percentage-wise than the Bitcoin USD, which means I can increase my USD capital more on that Ethereum US dollar pair rather than the Bitcoin US dollar pair. And I would rather trade my altcoin USD pair rather than the altcoin BTC pair, because again it has to move more. The altcoin USD pair has to move more percentage wise than Bitcoin USD in order for the altcoin Bitcoin pair to even go down. But now if your focus is to increase your Bitcoin capital, if that's your focus, to increase your Bitcoin capital, then yeah, and you would most of the time be focusing on trading either Bitcoin itself, Bitcoin US dollar, or altcoin Bitcoin pairs. That's really how the Bitcoin maximalist whales have been accumulating the majority of their Bitcoin, is on the altcoin Bitcoin pairs, because they're more focused in increasing their they're more focused on increasing their Bitcoin capital rather than their USD capital, let's say. I hope that didn't sound too confusing. It'd probably be easier if I showed you on paper. I've mentioned that several times in the past. I'm still saying sideways at best here for a while, if you're in a long position. Sideways at worst for a while if you're in a short position. Because those higher time frames, I'm looking at Ethereum US dollar now instead of Ethereum Bitcoin. And that 10-day, just that red line just doesn't show us ready to go up from the white lower B band to the basis. Instead, it looks more like the basis would come down to meet the price action, because we're not ready to go up from that white lower to meet that basis. The red's not ready to go up from the white level 30 to justify us going up from the white lower B band to meet that basis. Right now, if anything, that basis would be coming down to meet us rather than us going up to meet it when looking at that 10-day. looking at these higher time frames do help, y'all. 1700, 1575. There's a chance to go up to meet the basis at around 15 and a quarter in the 9-day time, the next 9-day candle. There's a chance for that. Around 15 and a quarter. But could we go up to 1700 or even 2000 and remain up there and keep going? No. That red and blue is not ready for that in that 9-day candle. There's still a lot of work yet to do to determine if we've made basically to determine if we are in accumulation or if we're going to see full-fledged distribution, phase E distribution. Because I told you for Bitcoin and Cardano, it's the same thing for Ethereum. It may be that this is not our backup last point of support in phase D. It could be all of this is our backup last point of support in phase D. We do not see a transition into phase E with a sign of weakness, but instead end up eventually going up to higher highs again, because all of this was a backup last point of support event in phase D on the macro. A major historical event is in the works where we end up going with a sign of strength, transitioning into phase E from a long period of a backup last point of support when looking at it on the macro. And that still remains to be seen yet, but I'm still leaning that we are in distribution. I cannot say for certain that we are in accumulation yet, but looks at that 27-day, looks at this 4-week going down below white level 30, going down below white level 30. There's a chance for some expansion down here to continue in that 27-day in this 4-week. 5 days, 20 hours, we get a new 27-day, where then it may begin to the red and blue and green, all of them falling below white level 30, begin to come down more significantly. The next 27-day candle that begins 5 days, 20 hours from now. Are we going to go up from $1,566? The white lower B band is $1,566 in this 4-week time frame. Are we going to go up from that over the next 18 days and 20 hours? Are we going to go up from that? It doesn't look like it with this red and blue currently below white level 30, and we are below what the price actions below white lower B band, because the red is below white level 30. Red's down here at around 22. That's below 30. It may continue coming down more. It may continue going down more, but the next 18 days, 20 hours doesn't look too good. I do not see reversal for a sustained long-term reversal. We don't see that yet. Do I know for a fact we're in accumulation right now? No. It doesn't look like it right now. This looks like our first sign of weakness in phase D, followed by an upthrust last point of supply event, followed by potential LPS before then seeing another sign of weakness in phase E. But are we in full-fledged distribution? We don't know that yet until we see a sign of weakness in phase E, because we could be in a macro backup last point of support event, which is a major historical event, just like you have in Elliott wave, like historical wave 3, historical wave 5, that are major tend to be major events in Elliott wave analysis. That's why I call it Wyckoff Method 2.0, because there's more events, and those events can occur on multiple levels, multiple tiers, not just a single level, a single tier. You can have multiple levels in which those events occur within each phase of accumulation or distribution. And there's other events that I added too. Just as we have a backup last point of support event in phase D of accumulation, we can also have an upthrust last point of supply event in distribution. In classical Wyckoff method, classic Wyckoff method, traditional Wyckoff method, they never heard of such a thing as far as an upthrust last point of supply event. No. Now they say backup last point of support event in phase D, but they've never heard of an upthrust last point of supply event in phase D for distribution. There is such a thing. Just as Wyckoff, Richard D. Wyckoff, identified events and placed them within phases back in the day, that's all I'm doing present day, modern day. If he can do it, I can do it. Can't the price structure change over time, over decades? Yes, it most certainly can, especially in the age of crypto. It most certainly can. Wyckoff schematics have become much more complex than they were back in the day, in Richard D. Wyckoff's day. Since the price structure is different, especially in the age of crypto, well, just as he identified events that occur within phases back in his day, we can do the same thing for present day, even if it's changed from present day from his day. That may require you to create names for new events that you're seeing that occur on a regular basis, which they do occur on a regular basis. They most certainly do. And I cover that in my lessons, my Wyckoff Method lessons. This was 2018. I tell you, let's start with 2014. When you see big moves like this, a big pullback before then going up again to even higher highs like that, anytime that happens, even right here, you have to say this might be preliminary supply that should be followed with a buying climax that should be followed by a automatic reaction. So anytime you see that, you have to say that. Well, look at this. We went up, we had a significant pullback, and went back up again. You have to say, hey, this might be preliminary supply range. And it's a huge range. When you see that, from what I've seen when looking in history on other pairs, whether it be for crypto or for legacy markets, when you see that, you are subject, when this was accumulation. When we go into distribution, we are subject to have a two-tiered distribution schematic with huge moves. When you see that, this occurred in 2014. We didn't see anything like that in 2018. Here we had a pretty big preliminary supply range. There's the upper boundary. Here's the lower boundary for our short-term preliminary supply range right here. So if this is our, we say this might be preliminary supply. If we ran up, we know our buying climax should come down to or near the upper boundary or lower boundary of this preliminary supply range. We see we came down, in fact, it even wicked down below it. It wicked down below it, but we have to pay attention to where we closed. Not where we wicked to, but where did we close? We closed within this range. On the buying climax, followed by an automatic reaction, followed by a second test of supply, followed by a simple reaction, followed by a test of supply, by another simple reaction, followed by a test of supply, followed by another simple reaction. We have yet to see a sign of weakness until we close below the lower boundary substantially. We drop down substantially. See a candle close substantially. This was not substantial right here. I wanted to see substantial. That is a sign of weakness. This was not a sign of weakness. In classical Wyckoff method, they would call that a sign of weakness. Not in modern day Wyckoff 2.0. Just as you cannot see a sign of strength in phase A, B, or C in accumulation, you can only see a sign of strength in phase D, as in delta, and phase E as in echo. For accumulation, you can only see a sign of strength in phase D and phase E in accumulation. That is in classical Wyckoff method. It's also the same in Wyckoff Method 2.0, but now here's the change: distribution. I made sign of weakness of distribution synonymous with sign of strength in accumulation, meaning it's impossible to see a sign of weakness in phase A, B, or C of distribution. You can only see a sign of weakness in phase D, as in delta, and phase E as in echo. So this was not a sign of weakness. I would call this an exponential automatic reaction because we wicked way below the lower boundary of our preliminary supply range. We wicked way below it, but we closed back within that range. If we only wicked down here to the lower boundary and then closed back up within it, I would not call that an exponential automatic reaction. I would just simply call it automatic reaction. But since we wicked way down, that was an exponential move down, but that was not a sign of weakness. Technically, in Wyckoff Method 2.0, that is not a sign of weakness, especially in phase A, even in traditional Wyckoff Method. This is phase A. That is not a sign of weakness. You don't see a sign of weakness in phase A of distribution. Even in traditional Wyckoff method, that's not a sign of weakness. All right, one major definition, or what defines a sign of weakness in Wyckoff Method 2.0, number one, sign of weakness can only occur in phase D and phase E. Number two, it needs to close substantially below the lower boundary of your preliminary supply range. Here's our lower boundary. It needs to close substantially below it. That occurred right here. Now, when you see a sign of weakness, that should be followed by an upthrust, followed by a higher low, followed by an upthrust last point of supply event. That's what we got right there. Then you can expect it to come down again. Then you can have multiple, in this case 2 last point of supply events in phase D, but we're still in phase D as in delta until right here. Now we close substantially below where we were ranging sideways right here. We close substantially below it. Now we just transition to phase E. Here's a sign of weakness that has begun, but has that sign of weakness finished? No. How do you know if a sign of weakness in Wyckoff Method 2.0, how do you know a sign of weakness has completed? Here's how. A sign of weakness is followed by an upthrust, followed by a higher low, followed by an upthrust last point of supply event. Well, here when we came down, this may be a sign of weakness that should be followed by an upthrust. We got that. That should be followed by a higher low. No, we didn't get that. We got a lower low. Then we are still working on that sign of weakness. It's not done yet. It's not done yet. That sign of weakness is not done yet. When we get an upthrust followed by a higher low, and then follow up that with a upthrust last point of supply event, meaning it can go even higher. Upthrust last point of supply event. Do not assume that you're only going to get one sign of weakness in phase E, because it can be here. We had a double top, then followed by last point of supply, last point of supply. We fell down to the same level. We did not close substantially below that right here in 2018. You know what this means? Whenever we came down, again, you might call this a sign of weakness, but it was not. We came up with an upthrust last point of supply event again. We're still in phase D. All of this from here, just a moment. This is going to help when I cover S&P 500. That's the reason I'm covering this right now. This is going to help when I cover S&P 500. All right, we went up with an upthrust last point of supply event again in phase D as in delta. Phase D went from here all the way to here. We had upthrust last point of supply right here. We had an upthrust last point of supply right here. We had an upthrust, higher low, upthrust last point of supply event here. Came down again, but we still have yet to see another sign of weakness. We have not closed substantially below our first sign of weakness in phase D right here. We have not closed substantially below that. We have not seen that yet. We did not get that until here. Now we have a sign of weakness in phase E right here. Excuse me, this should not be phase. I remember I copied and pasted this. No, that is correct. Phase D, phase E, phase E, phase, excuse me. Closed substantially. This was closing substantially below it. Phase. Oh, wait a minute. Wait a minute. Yeah, phase D, phase E. Yep, excuse me. these were still in the works. I have not finished them yet. (2018). I had not finished it yet. Phase D. Phase E, we had multiple upthrust last point of supply events before, again, multiple upthrust last point of supply events, not multiple SIL events, sign of weakness events, until here, until right here. Also, phase A of accumulation began right here. Phase A of accumulation began right here. Was our preliminary support, followed by a selling climax, automatic rally, second test of support that can go lower than your selling climax, followed by a simple rally that came up near our preliminary support, followed by a test of support, followed by an exponential rally, followed by an exponential rally. When looking at on the macro level, I know right now I'm in the 12-hour, not the 3-day. All right, but there's a reason that I'm going through this. Now let's go back to 2014. That was an example of multiple upthrust last point of supply events in phase E. Phase E. Our first sign of then 2014, our first sign of weakness in phase D, up thrust, higher low, up thrust last point of supply. That's more like a double top before finally seeing last point of supply events. Before then a sign of weakness in phase E as an echo. We closed below our previous sign of weakness, substantially below. So that's a sign of weakness in phase E, followed by an up thrust, followed by a higher low, followed by an up thrust last point of supply event, followed by multiple last point of supply events, before another sign of weakness in phase E that went to even lower low, faster in 2014. Then again we had multiple signs of weakness in phase E, 2 of them back then, with only one up thrust last point of supply event within each sign of weakness in phase E. Well, 2018 was more unusual, where here's our first sign of weakness in phase E. We had a second sign of weakness in phase E right here, but before we had that, we had multiple up thrust last point of supply events before going down with our second sign of weakness in phase E in 2018. All right, there's a reason I covered that, because when I get into S&P 500, it's going to make more sense. These are common occurrences, especially in crypto, but I believe now also in legacy markets, especially since we are approaching the end of our current fiat system, and they desperately want to create some type of an event and control the narrative so that they can control what system we transition into. Of course, they want their centralized system rather than our decentralized system. They feel threatened by our decentralized system at present. All right, let's go to S&P for a moment. Then I will do XRP. But let's go to S&P. All right, we're going to look at it using Wyckoff Method 2.0 and the indicators to determine where we are potentially within a Wyckoff distribution schematic and what might occur next within that schematic. That's what we're currently working on. All right, this might be preliminary supply that should be followed by buying climax that should be followed by an automatic reaction, followed by a second test of supply, followed by a simple reaction. That these reactions now should come down to or near the upper boundary, but not close below the lower boundary, in order for them to be considered legitimate reactions. Because if we close below the lower boundary, we went into an immediate sign of weakness all of a sudden, which is totally out of character with a Wyckoff distribution schematic, which means there's some type of major black swan event that had to occur within that corporation for that stock, or within the entire world economy as a whole, if looking at an index like we're looking at now for an S&P 500. Like when I say looking at for a stock, if you saw something like that occur in a stock, totally out of character with distribution, that may have been something like an Enron, for example. There was a black swan event. It ended up being a scam. Which that's basically what also happened with Luna. We didn't go through all the phases of distribution. It just all of a sudden, wham, sign of weakness. A black swan event occurred, totally out of character with Wyckoff distribution. Sometimes that does happen. All right, but here we had our preliminary supply range, followed by a buying climax, followed by an automatic reaction, followed by second test of supply, followed by a simple reaction, followed by an up, in this case, an up thrust in phase B, as in Bravo. If you see that occur, you have a two-tiered, two-leveled distribution schematic. That also means that your simple reaction does not have to come down to or near the upper boundary of our preliminary supply range. It can come down to near your buying climax in modern day Wyckoff Method 2.0 analysis. So we had followed by a simple reaction phase B. Then we went even higher. Well, if you see a close above previous highs of an up thrust in phase B, or your buying climax in phase A, if you have another high, that's likely, it's highly likely, you have just seen an up thrust after distribution event in phase C, as in Charlie. Now, you do not have to have an up thrust after distribution event in phase C of distribution, just as you do not have to have a selling, Just as you do not have to have a Wyckoff spring in accumulation, you do not have to have a upthrust after distribution event in distribution in order for it to be considered that we're in distribution. You do not have to see a Wyckoff spring in phase C in order for there to be actual accumulation. You do not have to have a spring. You can go up with a sign of strength, transitioning from phase C into phase D with a sign of strength. You can go up with a transition into a sign of strength without a spring in accumulation. Just as you can go down with a sign of weakness in phase D in distribution without an upthrust after distribution event in phase C. In this particular case, we had an upthrust after distribution. That is not a sign of weakness. It's not considered a sign of weakness in Wyckoff Method 2.0 until we close below the lower boundary of our preliminary supply range. We did not do that until here. Then we close below it, below the lower boundary of that right here. So we were going down with multiple last point of supply events, still over the long term working on our to get to our transition from phase C into phase D with a sign of weakness. In order for us to really fully fledged make that transition, we have to close below that lower boundary of our preliminary supply range. What we did right here, we closed substantially below it. We have a sign of weakness. Is it done yet? Well, let's see, because the sign of weakness should be followed by an upthrust that should be followed by a higher low, then followed by an upthrust last point of supply event. We did not get a higher low. We got a lower low, which meant that sign of weakness is not done yet. It's not done yet. I just gave an example of this with Bitcoin. Here I am with S&P 500 doing it. This sign of weakness wasn't done yet. We came down again. Well, is our sign of weakness done yet? Well, you don't know until you see an upthrust followed by a higher low. That's generally followed by an upthrust last point of supply event in phase D, as in delta. All right, now, are we going to see, we should see a transition from phase D as in delta into phase E as in echo. How do we make that transition from phase D as in delta to phase E in echo? You got to have a sign of weakness event. How is it considered a sign of weakness? It has to close substantially below the sign of weakness that we previously had in phase D. Well, we're already beginning to close substantially below where, hey, this is looking like a sign of weakness. But ask yourself this, is that sign of weakness done yet? Just like right here, we close below the lower boundary of our preliminary supply range. We close below it. Hey, this is a sign of weakness. Is it done yet? Well, let's see. We have an upthrust that should be followed by a higher low. Did we get a higher low? No, we got a lower low. That sign of weakness was not done yet until here, where we went up with an upthrust followed by a higher low that then should be followed by an upthrust last point of supply event. In phase D as in delta, now we're transitioning, last point of supply, last point of supply. In phase D, where now phase E is looking like that we've begun a sign of weakness event. Has it finished yet? Is this sign of weakness done yet? We don't know. We don't know that yet. I don't believe so, especially when we're looking at the indicators, and we're about to do that. We are about to do that. S&P 500, a surprise. Or excuse me, S&P 500. A suspicious spring. Wyckoff tape reading lab. A suspicious spring. In this video, this is Wyckoff Trading Method, the channel that has 45,000 subscribers on YouTube. Wyckoff Trading Method. They're saying a suspicious. In other words, they're saying, man, this looks like a Wyckoff spring of accumulation for the S&P 500, but I'm kind of cautious. I'm kind of suspicious about that. I just walked you through, I say again, I just walked you through that I don't believe this is a Wyckoff spring. I don't believe this was a selling climax followed by an automatic rally, followed by a second test of support, followed by a simple rally, then immediately into a Wyckoff spring, then immediately working up with multiple last point of support events before seeing a sign of strength. I'm sorry. I do not believe this is a spring in accumulation. I just have a hard time seeing that this is a spring in accumulation. No. I believe we are making a transition from phase D as in Delta into phase E with a sign of weakness, and this sign of weakness is not done yet. It is not done yet. Not even far from being done yet. And we're about to go to the indicators to help us determine that. Alright, so let's begin going to the indicators. That's the immediate group. Excuse me, this is the short-term group. I believe Wyckoff Method is best understood, especially nowadays, by using Wyckoff Method 2.0 in obvious events that I see that occur. Because in traditional Wyckoff Method, on a sign of weakness, he has no such thing as an upthrust followed by a higher low followed by an upthrust last point of supply event. There is no upthrust last point of supply event in traditional Wyckoff Method. I added that for modern day, more complex Wyckoff distribution and Wyckoff accumulation schematics. They're much more complex nowadays than they were back in his day. So again, just as he named events within phases of distribution and accumulation, I can do the same. I just improved upon what he did. In my opinion, I have improved upon it. Just as I improved God mode indicator. What is God mode indicator? Phoenix ascending. But God mode did not have a least squared moving average. I thought it needed one. That's what that blue line is. It needed one. That helps us. So I added the least squared moving average to the God mode indicator. Number 2, God mode indicator, its inputs default 9, 16, and can't remember if it was 23 or 33. Can't remember. In the beginning, I told everybody to change those inputs from 9, 16, and 23 to 9, 6, and 3. That's what I have as a default within Phoenix Ascending. Because if you were to use the inputs that they had set as default for God mode, I'm sorry, but it was trash. Wasn't going to help you in any way. Plus, they also had pressure dots that I do not use. I should take them out of Phoenix Ascending, but I'm not, out of respect to the other 3 creators of God mode indicator. I consider myself one of those creators of God mode. Not because of what they did in the math and the creation of the red line, the white energy that I call energy. They might call it white line. So what they created with the red line, white line, green line, I had no part in that. I added the blue line. I changed the inputs, but most importantly, this is something they did not do, but I did. Absolutely no rules at all for when to open and close a trade. When could we potentially go up or down with volume or with very little volume. So they did not do that. I did. I made sense of it. But first, in order to make sense of it, I had to change the inputs, and I had to add a least squared moving average. All right, I improved upon God mode. Bollinger Bands, I improved upon that in that I don't just have one set of Bollinger Bands. I have multiple sets of Bollinger Bands that use Fibonacci math, that use Fibonacci in the levels of the standard deviations, not the default levels for the standard deviations. I improved upon Bollinger Bands. Then I color-coded them, the Bollinger Bands, with the levels within God mode that is now Phoenix Ascending. I improved upon it, just as I feel, I've improved upon Wyckoff Method. That's why I call it Wyckoff Method 2.0, because there's events within Wyckoff Method 2.0 that are not used in traditional Wyckoff Method. Also in traditional Wyckoff Method, it uses point and figure to get a price range target. There's no need for me to do that with present day Wyckoff Method 2.0, because Wyckoff Method 2.0 also utilizes Phoenix Ascending with badass B bands, because I can tell within Phoenix Ascending, due to the color coordination, where the price action can go to, target range, within the badass B bands. There's no need for me to use point and figure. There's no need for me to use volume bars and price bars. You know, any of that tape reading, stuff like that. Richard D. Wyckoff would be thrilled to have these indicators. He would absolutely love it, but he did not have this technology in his day. You know, we have this technology now. Let's take advantage of it. Let's use it to our advantage. Let's not be stuck in the old ways. Let's improve upon ourselves. Just as I know Richard D. Wyckoff would have improved his method if he had lived beyond his years into the technology that we have today. Tape reading, point and figure, who needs that when you have this? You know, volume bars. Yeah, I need my price bars, but do I need those volume bars if my indicators are measuring volume? No, you don't need volume bars. I simply improved upon everything. All right, now let's get, I want to look at higher time frames first before looking at the short-term group. I'm currently in the near-term group. The near-term group is the 12-hour right here, then 24-hour. Let me do something, just a minute. Appearance 20, okay, that's there already. So since that's there already, let me increase the size here so that y'all see those values a little better. All right, 12-hour, 24-hour, 2-day, 3-day, 4-day, 5-day, 6-day, weekly. There's a chance to go up from that white lower towards the basis in the 6-day, the weekly. Ooh, not in that 5-day. I mean, that red line would have to, bam, and automatically shoot up. What does that mean? If we did that, what does that mean in that 5-day time frame? Well, let's do this. This red line is way down here. Hold up a second. Let me do something. That energy go to energy. Let's make it a little more translucent, and let's add it to everything. Alright, now let's go to the 5 day. This red is way down here at level 19.84. Let me increase the font size again even more. Y'all should see that over here to the far right. Far right, 19.84. The red line is at level 19.84. Let me also do this. Let's get rid of pressure. I got rid of, oops. I got rid of the pressure dots in the 5 day. Let's apply that to all time frames. Alright, now let's go back to full screen on the 5 day. Now we no longer see that orange over here, orange pressure. Yellow, that's the K line of the stochastic RSI, but again the red's way down here, 19.84. If we all of a sudden went up to that basis around 3,920, just shy of 4,000, what are the odds of us continuing going up from the basis to the white aqua upper and remaining up there? What are the odds of that occurring? Well, is this red line up here ready to go above yellow level 50 to justify us going up from yellow B-band basis to the white aqua upper? That red line is nowhere near yellow level 50 to justify us going up from yellow level 50 to white aqua, yellow level 50 to white aqua, to justify us going up from yellow B-band basis to white aqua upper B-bands. That red line is nowhere near yellow level 50. It was right here, where we then went up from the basis to white. Didn't quite make it to the aqua, but we at least went to the white because the red was ready. It justified us having increased odds of going up from yellow level 50 to white aqua. We see the green line, which usually reflects the price action, went up to white aqua. We went up to white. But the red line, did the red line continue above white level 70 with the green going up to have expansion up? Because the blue also got above yellow level 50. Yet expansion up was rejected in this 5 day time frame. We didn't keep going up. Well, let's do this. I'm going to put a vertical timeline right here where red and blue, they're both above level 50 in this 5 day time frame. Let's double it to 10 day. Was this red? You see that same yellow vertical timeline? Was this red ready to go up above yellow level 50 to justify going up from the yellow B-band basis to white aqua upper? No. The very moment that energy turns down, what's that price action doing? It's coming down. That yellow B-band basis is resistance, has to be, until that red line is on the verge of going up above yellow level 50. Then I would say, hey, that yellow B-band basis may not be resistance. I believe we may be going up to that white aqua upper. But here's another thing. To increase the odds of going up to that white aqua upper, we need both the red and the blue above white level 30. If only the red's above white level 30, that basis is it, my friends. That basis is it. But now if that blue also gets above white level 30, then we have increased odds of going up from the basis to the white aqua upper. Then we do. Like right here, red and blue are above white level 30. Yeah, we can go up easily up to the white aqua upper. Right there. Blue is already above white level 30. Once that red got above white level 30, Here we go up from the basis to the white aqua upper. Let's keep going back further. Nowhere in here did we even attempt to go up to the white aqua upper until once the red and the blue got above white level 30. Then we can go from the basis to that white aqua upper, but by that time the white aqua upper was coming down to meet us in that 10-day time frame. But I think y'all are getting the drift here. What I'm trying to say, what I'm trying to say here is this, that seeing how this, I was pointing out this right here, the red was not on the verge of going above yellow level 50 to increase the odds of us going up from the basis to the white aqua upper. Yes, the red was above white level 30. Was the blue above white level 30 there? No. We're not going to the white aqua upper. All right, now, present day. Let's go back to the 5-day. Then we'll go back to the 10-day. Present day. Is this red anywhere near yellow level 50 to justify us going up from yellow B-band basis to the white aqua upper? No. No. In my opinion, looking at this 5-day time frame, we're not ready for anything like that. If we did go up to the white aqua upper, we are exponentially overbought, overextended. I'm not going to say overbought, overextended. We are just exponentially overextended if we went up to that white aqua upper this 5-day candle or the next 5-day candle. Even the next one after that, because that red is nowhere near yellow level 50. It's down here at 20, a little below 20 in the 5-day time frame. So if we did see a pretty good move up, I think the basis is it, y'all. With that red down here at 20, us going up from the yellow level 50 to the white aqua upper, for us to go up from the yellow B-band basis to the white aqua upper, in order for us to do that, that red's not in position to do that. So if we did go up a pretty good move, yellow B-band basis, 3,920. That's it. 3,920. Well, now, with that in mind, 3,920. Let's go back to our Wyckoff schematic. Let's go back to the Wyckoff schematic. Let me reduce the font. Like that. If you're familiar with Wyckoff Method 2.0, like I am, remember how we came down here? We've begun a sign of weakness, but is this sign of weakness done yet? Well, let's see. All right, we get our up thrust. Now we need a higher low. We didn't get it. We got a lower low. Well, that sign of weakness was not done yet right here because we continue down even lower. Now's the sign of weakness done yet? Well, let's see. We got an up thrust that should be followed by a higher low. We got that. That should be followed by an up thrust. Last point of supply event. We got that. Followed by multiple last point of supply events, before then potentially falling down with another sign of weakness. Well, right now we're already closed below even the wick. We've already closed below it. So we could be working on a sign of weakness, but are we done yet? We don't know that yet. All right, now are we going up to around 3,980? That's possible. If we did that, that would be very similar to this, where we begun our sign of weakness, but it wasn't done yet. We came down even lower. So could we get overextended in the 5-day where it goes up to the B-band basis in the 5-day, around 3950? Yeah, that's possible. Now, looking at it from a Wyckoff Method 2.0 point of view, would that be considered where This was a spring. We're in accumulation where we then go up with a excuse me, go up with a last point of supply, potentially come down with another test of support before then going up again with a last point of supply, then followed by a sign of strength, because you'd have to say this was our preliminary support range, followed by a selling climax, automatic rally, second test of support, selling climax, automatic rally, second test of support, simple rally, test of support, that they're saying is a suspicious spring. In my opinion, we're in distribution. We're in distribution. We're currently working on a transition in a sign of weakness in phase E. Let's go to higher time frames, because I have not gone higher. I only went up mainly to around the 10-day time frame. Let's go higher. Look at this 20-day time frame where I doubled the 10-day to the 20-day. Red is already below white level 30. Now the blue's about to get below white level 30. We've already begun stage 1 expansion down, where we had the red, and now the blue get below yellow level 50. That's stage 1 expansion down. We have visible sign of stage 1 expansion down. We're on the verge of getting stage 2 expansion down. The next 20-day candle that begins October 19th. That's when the next 20-day candle begins, October 19th. Today is the 19th. Excuse me. Yeah, that would be correct. We're not seeing how much time or days is left in the current 20-day candle. It's not showing us that right here for whatever reason. I don't know why, but it's not. Some of them do show it, like the 19-day. It's showing we have 12 days, 15 hours remaining, but it doesn't show anything in the 20-day time frame. Because the current one began 21 September. I think this is messing with our head. This is just the current. Yeah, there is. No, there isn't. That's showing this candle right here. But we definitely have a chance for stage 2 expansion down here in the 20-day. We have a chance for it in the 19-day, especially after 12 days and 15 hours passes. The next candle, when it begins, then we'll have the red and the blue below white level 30 for stage 2 expansion down. For sign of weakness in phase E to continue. It's not done yet, in my opinion. Red and blue in the 18-day went below white level 30, and we've begun stage 2 expansion down. Eight-day looks like it. Red and blue below white level 30. Red and blue below white level 30. Red and blue below white level 30. Let's go even higher. Let's go to from the long term to the macro. 11-day. I know the green's coming up currently, but that blue is so low, y'all. We could be looking at like 4,000 if there was a move up all of a sudden. The highest, absolute highest, is 4,000. That's it. This blue's too low to justify going up above the basis to the white aqua upper. That blue's way too low. It just don't see that happening in the 11-day. We're beginning stage 1 expansion down in the 22-day because the red and now the blue is below yellow level 50, stage 1 expansion. The red is below white level 30, justifying that we can be below white lower B band in order for us to go up from the white lower B band, meaning in order for this white lower B band to no longer act as resistance and to become support, that red needs to get above white level 30. And we just don't see that happening yet in that 22-day time frame. The 23-day, we're on the verge of both the red and blue getting below yellow level 50 to create calls for stage 1 expansion down. Same thing here in the 24-day. Red and now the blue getting below yellow level 50, where we're not only have fell down from the yellow B-band basis to the white aqua lower, but now we might begin to see expansion down, where it keeps going lower in that 24-day time frame. You see, we already have stage 1 expansion down in the 4-week time frame. The next 4-week candle that will begin a few days from now, we're subject to see stage 2 expansion down in the 4-week. Now let's go to the super macro. 2-week, I just don't see how that's accumulation. That's the 3-week, 4-week. Hold on a second. What is this set on? 20. Okay. Let's increase that again. When both the red and the blue get below white level 70, that increases the odds to continue down to the white aqua lower, like what we saw here in the 6-week. This is the 8-week, but in the 6th week, red went below white level 70. Yeah, we can go down to the basis. The blue gets below white level 70. Now we can go down to the white aqua lower. Basically, I'm saying the candles can close in that white aqua lower. When that blue gets down below white level 70 along with the red, especially once the green begins going down, which it did right there. We're getting that in the 8-week, where the red and blue both below white level 70 to increase the odds of us continue going down to close within the white aqua lower. We see that in the 10-week. Red and blue both below white level 70. That increases the odds to eventually come down to the white aqua lower. It's just taking time to get there. We finally have the red going down below yellow level 50 to increase the odds of us going down from the yellow B-band basis to the white aqua lower. We still have 1 month, 28 days remaining in the current 10-week candle. But sometime during this 10-week candle, don't be surprised if this ends up being a red candle with us going down from the yellow B-band basis to the white aqua lower. Again, we have almost 2 months remaining in this 10-week candle. I still believe this is going to end up being a red 10-week candle. It's going to end up being a red one. And we go down even further to the white aqua lower B-bands, and then the next candle, 10-week candle after that, we're subject to begin expansion down. Not only go down to the white aqua lower, but then begin to potentially get expansion down, because by then the red and blue both get below yellow level 50 to create cause for stage 1 expansion down. That green still going down, getting close to aqua level 10. Seeing in the future we can come down. This is looking rough, y'all. Like we could very well be in distribution. Because when you're in accumulation, you're good as long as the red and blue both stay above that white level 70. See, yeah, the red went below white level 70. Did the blue go below it right here in 2016? No. No, it didn't. So, no, that was not distribution. Our accumulation was still going. It was still going. Here's the first time in a long time we have both red and blue below white level 70. Just as right here. Wham. Just as right here. Wham. I say again, this is the first time in a long time where we finally had the red and blue be below white level 70 in the 10-week time frame. Don't be surprised if we see wham, just like we did right here with expansion down, and right here where we ended up with expansion because the red and blue below yellow level 50, we get expansion. Red and blue below yellow level 50, we get expansion. B-band's opening up. Man, they're red and blue is getting closer to yellow level 50. The next 10-week candle where not only go down but go down significantly with expansion. Again, the fact that the red and blue is below white level 70, historically, when looking at that in the 20-week time frame, not always. You see right here, we went below white level 70, but we were not in serious distribution there. You know, sometimes you're not, but you most certainly have to be wary when you see that occur. All right, that's the 10-week. Let's look at the 20-week. This was distribution for actually distribution. This was our macro, just like with Apple. Now we're looking at an index, in this case S&P 500. I guarantee if you were to look at Apple during this period, you were seeing it acting very similar, where then back up last point of support. For long term, here's back up last point of support for macro. No, you can't really say that for this index. This index has existed much longer than Apple. So no, forget I said that. That's me thinking out loud. Of course, this is the Great Depression in the 20-week time frame. Let's go to 30-week. All right, this I need to see. I'm going to the 25-week. I'm looking for a time frame where the indicators are lined up with where the price action is. Fell down from white upper because the red is falling down from white upper. Price action falls down from white upper. The Great Depression, it just got bad, overextended hard early in the beginning, even when looking at the 25-week. And then 2008. From what I'm seeing right now at the moment, if we're to go down seriously, it would be more like a Great Depression event rather than a 2000 or 2008 event. Let me look at 15-week for a minute. Pardon the delay here for a moment. What did I do with my chat box? Hold on a second. Let me get that back over here so I can see when you are talking. Now let me get my other window back up. Are you no longer using red-green crossovers with green moving towards 50 as a general indicator? As far as when to open or close a position, no. I use mainly the green line, the yellow K line, the magenta D line for opening and closing positions. The red and blue lines are mainly used to determine when we do open those positions, where could we be going to and why. When I say where could we be going to, well, that's what the badass B bands are for. That's the reason why they're color coordinated with Phoenix. So again, I now basically mainly use green line within Phoenix and yellow and K line and magenta D line of the stochastic RSI. I use those three: Phoenix, ascending, green line, and both stochastic RSI lines to determine when to open and close trades. The red and blue lines are used really to tell us a number of things. When could we have increased volume due to expansion? That's just one example. Where could we go to when we get that expansion? That's another example. Where could we go up from and to? Where could we go down from and to? That's mainly what the red and blue lines are used for, to give us an idea on a location of where we can go up or down from, or where we can go down from to where, and where we can go up from to where. That's mainly what I use the red and blue lines for, but we also use the energy as well. I can do pressure races as well to get an idea of how long upward pressure or downward pressure could last. Much better than what stochastic RSI is telling me. So there's several reasons to still use red, blue, and white energy, but they're used for different things. So again, I mainly use the stochastic RSI along with the green line of Phoenix ascending to open and close trades in multiple sets of time frames, not just a single time frame, multiple sets of time frames. And the red and blue line along with the energy is used for other things. Cool, G. Of course, I have not gone over those conditions in detail and in depth for opening and closing positions in this live stream using the green line and stochastic RSI, the K line and the D line and the stochastic RSI along with the green line. I've not gone into that, especially in the detail as far as how do we know what time frames to use when opening a long or a short position for a low time frame scalp, for a high time frame scalp, for a small swing, for a large swing, or for investing. I haven't done that. I'm working on videos for that for the website. Or will be working on that. This is not good with this red and blue. See, red, when it goes below the blue line, that also indicates bearish sentiment. So it's not looking too good at the moment. Because also the red and blue are going below level 80. Excuse me. We've already begun overextension down, because the price action came down to the basis. Right now it's just a little bit above the basis. Is the red even below white level 70 yet? No. Yet the price is down below the white upper B band. So we're currently overextended down. Are we done with our overextension? Just as are we done with our sign of weakness? I don't believe so. I don't believe we're done overextending down in this 15 week. I don't believe we're done yet. I think it's still overextending down. That could be similar to 1929. 1929, that red went below aqua level 90. You see a little green line right here just below aqua upper B band, but we immediately started, here we are at the basis right here. Where's the red line? Is the red line anywhere near yellow level 50? No. So here we are falling down from the yellow B band basis to the white lower B band, and kept falling below the white lower, down from the white lower to the aqua lower. Is the red down here falling below the white lower towards the aqua lower? No, the red was way up here when we're doing that. So we started out overextended down and just kept overextending down, just falling. Don't be surprised if that ends up happening this time. It most certainly is possible. We're overextended down, currently in the 15 week. Is that overextension down going to continue? It's looking like it when looking at lower time frames, such as the 5 week. I went from the 15 week to the 5 week. Red and now the blue are getting below yellow level 50. We already see the B bands looking like they're opening up. See how they're opening up? They're not contracting anymore. They look like they're opening up for stage 1 expansion down. They're certainly looking like it. And we're currently overextended down. Just as we are in the 15 week, we are in the 5 week. We're overextended down. The price is down here at the aqua lower. Is the red down here at aqua level 10 to justify falling below the aqua lower? No. Alright, so we may not be ready to continue falling down just yet. We could come back up again, but hey, are we going to come back? In other words, some are saying this is a suspicious spring, or this could be a spring, Wyckoff spring, an accumulation, but I'm suspicious of it being so. Because what follows a Wyckoff spring in phase C? Sometimes a test, then multiple last point of supplies while trending up for a sign of strength. Is this red in this 5 week time frame anywhere near yellow level 50 to justify going up from that yellow B band basis? No. So 4,208, the yellow B band basis in the 5 week, is most definitely a ceiling of resistance. That is strong resistance right there for a while. That is strong resistance. Are we going up higher than the white lower B band towards the basis? Well, number one, the green needs to turn up. We still have 23 days remaining in the current 5 week candle. That green's got to turn up. That K line's got to get above the D line. Also, that K line's got to get at least above level 12, but I prefer at least above level 15. The yellow K line, not only does it need to get above the magenta D line, but that yellow K line also needs to get, let's say, above level 15. Needs to get above level 15. When it gets above level 15, like we did right here, here's right at level 10. Hey, well, we could be going up, but I I would rather, as an investor, you would be using a 5-week time frame as an investor. As an investor, I would really like to see this begin going above level 15, that yellow K line, right at the opening of this candle, which is right around the yellow B-band basis. As an investor, then you would have maybe accumulated quite a bit right here at the very beginning of this 5-week candle. The first week of that 5-week candle, you bought a lot. Then here's 5 more weeks, 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 5 more weeks. You know, basically 510 times 5, 50 weeks, a year. And yeah, let's go to a lower time frame. Let me go back to multiple windows. That was right here. 5 week. Let's change that back to 10 week. If we were to factor in geopolitical, y'all know how mainstream media has been lying about the economy. Keep making up one excuse after the other as to why gas prices are high in the U.S. without the Biden administration doing anything to reverse what they undid with the Trump administration, where the Trump administration made the U.S. Totally independent, self-sufficient as far as fossil fuels are concerned. In fact, before Trump left office, we were the #1 exporter in the world. The #1 exporter in the world, even more than Saudi Arabia. The largest exporter in the world. We sold more oil to other people than anybody at that time during Trump. Then Biden killed all of that. That's just an example. Yet, keep saying, no, we're going to stop doing that without having anything set up for electric automobiles. They're telling everybody that to live beyond their means to buy an electric vehicle. Ain't none of that happening. And then do all that without infrastructure in place to do that, without people having incomes to do that. I can go on and on and on and on. They keep making lies, the media along with them. They keep making lies as to saying the economy's doing great. Look, I just lowered prices on our gas here in the U.S., Biden has said, and his press secretary said recently. Well, hell, they went up from $2 to over $4. They more than doubled during the first 2 years, during the first year of their administration. Why? They stopped all oil drilling in the U.S. Biden did with executive orders. Not only that, he stopped the leases on government land for them, where they had to stop drilling there. And he's going to keep it that way. They're intentionally trying to destroy not just the U.S. economy, the entire world economy. Their agenda is the Great Reset. Biden, all of them, most all of these leaders, not what I said, most all, not all, but most all leaders in the 190-something countries in the world today are part of the World Economic Forum. Seriously. You look in their so-called school, Klaus Schwab school. It's pathetic, y'all. They are all working in concert, one together with the other, to bring us into a great reset. The main reason why is because they know who's they? The central bankers. Who's the main family that owns majority stock in most central banks around the world? Rothschilds. A lot of people don't know that. Rothschilds have their hands in most every central bank in the world. They have trillions of dollars, but they don't want anybody on their most richest person in the world list. No media will list that. They refuse to allow media, magazines, whatever, to do that. But anyway, what I'm getting to is they're working on that agenda. But y'all know we have an election coming up here in the U.S. I'm going to go and say deep state, with all their puppets, who basically funds. Why is there even a reason for a deep state? And how is it funded? Central banks, period. They need a great reset because they know their current fiat monetary system is about to implode upon itself. The dollar has lost over 90% of its value since its inception in 1913. The dollar has lost over 90% of its value. We are nearing the end of the current Federal Reserve note. It's about lost all it can lose before going into hyperinflation. Now, they normally need some type of major event, they usually prefer a war, to basically distract the people from the fact that they're about to replace the system, restart the system. Trump was elected, not Hillary, which kept them from implementing their 16-year plan. 8 years of Obama followed by 8 years of Hillary. That didn't happen. Trump was elected and stopped that. Now they had to quickly undo what Trump had undone of what they did. They had to reverse everything Trump did to get back on course of their 16-year plan. And they needed an event. Hillary was going to put us in war. Since Hillary wasn't elected, we never got to war. What did Trump do while he was in office? They kept saying he was going to start World War III. What did he do? He went around starting peace everywhere, taking troops out of everywhere. What are the liberals, the deep state, what are they trying to do now? They're trying to get us not just into war, but into nuclear war. In fact, some of them even recently came out with an ad here lately saying that even talking about not going into nuclear war can be dangerous. I say again, talking about not going into nuclear war can be dangerous. We need to strike first, and so on and so forth. Bottom line is, they need a major event. The main reason why their current fiat monetary system is at its end, they need some type of event to occur before we go into hyperinflation. Because if we go into hyperinflation without an event, it's going to be obvious to everybody, that their system is a scam. Because why is it going down? Why is it losing value? It makes no sense. Why is it doing that? There's no war or there's no pandemic. They tried that at first, but they need some type of event. They're desperately trying to create an event to cover up their failing fiat monetary system. Period. They're trying to do that. And then, if they were to get that event, well, they say, yeah, we went down because we had this major event or whatever, and because of that event, we need to reset our monetary system. Now let's do this CBDC, this centralized digital currency. Centralized, not decentralized, but centralized. Well, where they have complete, total control
and they have us. They got us right where they want us. That's the end. Kaput, kaplunk. That's the end. If we get that far, where they end up winning, they get their event, they distract all the people, and then they control the, let's say, the narrative. They want control of the narrative to say, yeah, this happened, which caused this to happen with our currency, which is because of that, I think it's best we do this route now with our currency. Centralized digital currency. We have to keep them from doing that, y'all. And despite, if they do get an event off, we can't let them distract us. We can't do it. There's too many people waking up now. There's too many people waking up now. They know that. They see the polls. You can bet they're doing their own polls, but they're fudging the numbers on those polls to make them look more in their favor, when they know in reality, those polls really aren't like that. That most of the people are waking up and they are against them. But they're still fighting tooth and nail to try to get their event. They want their event to try to distract people, period. But with that in mind, since they are also looking at polls and all that, they're trying to use propaganda, trying to convince people, no, things are better. They're stepping up. See, we stop the prices from going up. They're going down. Biden's about to get into even more barrels of the strategic petroleum reserve here in the U.S. But that's just a temporary band-aid to try to keep gas from going up. They're doing all this before the election, period. They don't want gas to go up before the election in November. About 3 weeks from now, 21 days from now. They're trying to help themselves all they can. So don't be surprised if the S&P 500, let me go to here. Don't be surprised if we do go up right now. Just like right here, when our sign of weakness began right here when we closed below the lower boundary of our preliminary supply range. Our sign of weakness had begun here. Was it done yet? Well, it should be followed by an up thrust, followed by a higher low. No, we got a lower low. So our sign of weakness that came down here wasn't done yet. It came down lower. That's what I'm getting at here. After we then had that sign of weakness followed by an up thrust, that should be followed by a higher low. We got that. That should be followed by an up thrust last point of supply event. We got that. In phase D as in delta. Now phase E as in echo. Now here we go, closing even below that wick. It looks like we may have begun, potentially, begun our transition into phase E. But hey, this isn't necessarily our sign of weakness yet. We may not be done yet. We can have multiple last point of supply events. Multiple last point of supply events before falling down with a sign of weakness. To give you an example of that. We could have multiple last point of supplies before falling down with a sign of weakness. We can have multiple last point of supplies before falling down with a sign of weakness. You can have multiple last point of supplies before falling down with a sign of weakness. You know, here was a sign of weakness right here, phase D, followed by an up thrust, followed by a higher low, followed by an up thrust last point of supply, then multiple last point of supplies before another sign of weakness. All right, so again, in my opinion, we may be working on our, remember this is the 3-day time frame. Each candle a period of 3 days. So we may be working on right now, after beginning a sign of weakness. We could be in the process of a last point of supply before falling down again. Hey, it could go right here a couple of times, you know, up and down like this a couple of times before then falling down. But hey, 21 days. All right, so here we are, 17th. The next candle on the 20th, November 7th right there, November 10th right here. So after the election right here, November 10th. Let's do this. November 10th. Is a yellow vertical timeline. Let's make it thicker so it stands out a bit. Let's bring the indicators up. And let's also add badass B bands. There's the yellow B-band basis. Could we go up from the yellow B-band basis to the white aqua upper anytime soon? Not with that red, not with this red line, way below yellow level 50. Hey, this energy's going up. Yes, we have upward pressure. But the very moment that energy turns down, if that red line's not above yellow level 50, and that energy turns down, that price action's coming down. So yeah, we may be going up here at the moment. Are we going up from the white lower B band? It's possible. It's because the blue's already above, right at level 30. If that red, the next candle, goes up above 20, and it can, I can see us going up to the basis that's currently just shy of 4,000. That's 3,942. The next candle is going to be a little bit lower, right at 4,000. The next 3-day candle, it's going to be right at 4,000, the yellow B-band basis. It's possible to go up to 4,000, y'all. But hey, don't assume this is a spring and that we're beginning to go up, back up to or near a possible preliminary support range, you know, with a simple rally. In other words, they're basically saying, hey, selling climax, automatic rally, second test of support, simple rally, test of support, simple rally, spring, followed by multiple last point of supplies with a sign of strength. In other words, as if we're in accumulation. Here, I don't believe we're in accumulation. This red and blue in the 3-day are nowhere near yellow level 50, and I don't believe they're going to make it up to there and keep going higher anytime soon. Because if we were to double the 3-day, let's say to the 6-day, our red's down here at level 20, y'all. Our red is down here at level 20. It's not even getting ready to go above white level 30. And here's the white lower B band, which is synonymous with white level 30. If we do go up from the white lower B band to the basis, where is the basis? Right at 4,000. It's at 3,945. If we do go up to that, don't let that fool you into thinking, yeah, this was our spring. Here we are going off to the moon again with accumulation, thinking that, yeah, we should be going up to not only near preliminary support range, but could be going up with a sign of strength. I would be very careful about assuming that, especially after what all we saw in higher time frames, such as the 5-week, the 10-week, 15-week, 20-week, even the, let me look at the 4-week for a moment. Gosh, and let me get rid of red falling down below. Now the blue's about to fall down below white level 30.
that can justify even more expansion down. I mean, there's just not anything to show in my, let's go to 3 week just to see. That blue, how low it is, goodness. Let's look at the 2 week. Again, that blue's real low. The red's heading down. 2 days, 14 hours remaining. We'll see if this can all of a sudden make a U-turn here, but I'm sorry, I just have a hard time believing that. I went back to the 3-day time frame. Let's get our drawings back up. Again, in my opinion, I believe we are still in distribution. Let me get rid of the badass B-Bass. I believe we're in distribution, that we have just begun phase E as an echo of distribution. We've just begun it. Let me get rid of this vertical timeline. And let me move this over to right here. All right, now we just begun phase E. Just begun phase E of distribution. Just now working into it, and we transition from phase D to phase E with a sign of weakness, meaning I believe this sign of weakness has just begun, but a sign of weakness can have multiple last point of supply events, y'all, before finally seeing the bottom of that sign of weakness. Just like right here, we began coming down, sign of weakness, began coming down, well, down, sign of weakness, down, coming down, last point of supply, coming down, last point of supply, coming down. Hey, now this could be our sign of weakness, last point of supply that should be followed by a higher low. We didn't get that. So this was the last point of supply, but it was a more pronounced last point of supply before falling down even further, where we get an up thrust that's followed by a higher low. Yeah, this looked like an up thrust, but we did not follow up with a higher low. One was a lower low, which meant that sign of weakness was not done yet. We got an up thrust with a higher low. Now it could potentially be done yet, and because that after that higher low, we should see an up thrust last point of supply event, and we got that. That then, especially since that's phase D is in delta, now we should transition into phase E. So after that up thrust last point of supply event, sometimes you get a double top. In this case we didn't. After a double top, but in this case we didn't, we should see multiple last point of supply events, even into our sign of weakness. Our sign of weakness just isn't here. When this sign of weakness begun from phase C into phase D, our sign of weakness was not done yet. We had a pretty big last point of supply event before continuing down further with our sign of weakness. So a small last point of supply, a small last point of supply. This could be another small last point of supply. It could be a pretty decent large last point of supply like what we had here, before then finally falling down even further with our sign of weakness, because our sign of weakness is not done yet. So yes, we could go up. If we did go up, where could we go up to? Near 4,000, just shy of 4,000. So just how this came up pretty good to our lower, where we bounced up off of that support. So we went up to that. Could we go up to this? Just like how this went up to that, can this go up to that? 3,920? You know, around in that range. Similar to what we did right here, synonymous with that. Can we go up here? Synonymous with that. On this sign of weakness, right? Yes, we most certainly can, where this ends up being just a fairly large last point of supply that you may be thinking is an up thrust that should be followed by a higher low, then followed by an up thrust last point of supply event if we continue distribution. But hey, I don't believe it's going to do that. I think 4,000 is the top. They want the stock market to look as good as possible up into the election. They're still trying to push their propaganda, their lies, saying we're helping with this, we're helping with, when they're not. Their agenda is the Great Reset, period. With Klaus Schwab and all of them, everybody in the school, all of them. They need a Great Reset, period. They got to have it. Mainly because our current corrupted, failing fiat system is near its end, because most all fiat currencies have been used, taken advantage of to their end. How do they use them to take advantage? By using this worthless fiat currency to buy, to accumulate real assets. That's how. And this is the biggest transfer of wealth ever in history that has been in the works for the past 10 years, at least, if not the past 20. And now they're on the last leg of that, trying to get to a point where they own everything, we own nothing, and supposedly happy. That's not happening. Y'all know that. That's all propaganda. It's all a lie. Every bit of it. So, in my opinion, the reason we're going up at the moment, they need the stock market to look good. Biden administration's taking more strategic petroleum reserves to try to keep the price of oil down, at least until the election. They don't give a damn after the election. They don't care. But until the election, I think they who manipulate the markets, the central banks, all of them, right now they don't want the market to go down. So have we begun a sign of weakness? Yeah. Has it completed yet? No. We could see multiple last point of supply events where we have basically what is often referred to as a bear rally. A bear rally. We could see multiple bear rallies or last point of supply events while working on that sign of weakness. After the election, look out. Especially they lose the election. Really look out. Then they know they've lost. If they lose the election, then they know they lost. Then they're going to turn everything into hell in a hell in a hay basket. Send everything to hell in a hay basket. Just burn everything down, because they know they have come to their end. Their system has come to their end. Since they are coming to an end, they want to bring everybody down with them out of spite. Well, if I'm going down, send me to prison or go to jail, I have to kill myself, whatever. Hell, I'm going to kill all of you. Let's unleash all hell. Crash all markets. Let's send out some real viruses that have some serious 80% mortality kill rate, etc., etc. Like I say, I don't think we've seen much of anything yet, and we may have to go through a lot of pain before everybody finally wakes up. Hopefully, everybody wakes up. But I believe, as far as the S&P 500, we've just begun our sign of weakness, but it's not done yet. We've just begun our sign of weakness in phase E, but it's not done yet. Yes, we're currently going up at the moment with a last point of supply. Let's go back to all time frames here. 12 hour, 24 hour. Yeah, the red's above white level 30. Is the blue above white level 30 in the 2-day? No. Basis is it. Basis is it. The basis at 3,829. Could we wick a little bit above it to around 3,900 something near this low right here? Could we end up going to that just a little bit above the basis, but not quite to the white eye upper? Yeah, sure. That's possible. But now going to the white aqua upper and then continuing up with expansion, no. In order for us to do that in the 2-day, we need both the red and the blue to get above yellow level 50. Well, yeah, I know that red's getting close to yellow level 50. Is this blue doing it? No. No, it's not doing it. Look how low the red is in the 6-day. Do you think we're going up from the yellow B-band basis to the white aqua upper in the 6-day? Where's the yellow B-band basis in the 6-day? 3,945. 3,945 is where the yellow B-band basis is in the 6-day. Can the price action, does the price action have very good odds of going up from the yellow B-band basis to the white aqua upper? Not until this red line is on the verge of going above yellow level 50. Well, this red line's way down here at level 20. We have to say that yellow B-band basis in the 6-day is our ceiling of resistance at 3,945, just shy of 4,000. That's definitely a strong ceiling of resistance. Could we go up to that? Yeah. Are we going to see significant price action move up above that? Likely not. But yeah, we could go up to it. If we do go up to it, don't be fooled thinking that all of this is accumulation. That could very well be a last point of supply before continuing down further with a sign of weakness that's not done yet. It's not done yet. Again, that's my opinion. That's my opinion. And we could be on the verge of working out a death triangle in the weekly. This was the 6-day. The 5-day, it's not even, the red's not even ready to go up above white level 30. Yeah, the price action, if it does go up from the white lower B-band to the basis with the red that low, not even above white level 30, in that case we're overextended up. We're overextended up. Can we go up from the basis to the white aqua upper organically? No, not until that red can go above yellow level 50. Then we can be considered going up above the yellow B-band basis to the white aqua upper. That yellow B-band basis in the 5-day is the ceiling of resistance, 3,920. That's just shy of 4,000. I just don't see this being accumulation, that this was a spring, and that now we could follow up with a test followed by multiple last point of multiple last point of supports before then a sign of strength. I don't believe that's the case. I really don't. I believe a couple of more 5-day candles, actually 4 more 5-day candles, 4 more. Election has occurred, it's done, and then the market's over. They could say the hell with the market, the hell with everything. They're getting back to the Great Reset. Until January, when the new Congress starts, all the new senators that were elected in November finally begin their terms in January. Shoot, they're going to try their damnedest to tear everything up. Everything. They're going to try to tear everything down if they lose this election. I'm telling you. I believe they're still going to do it regardless of whether they lose or not. If they were to win it, yeah, they're still going to do it, but then they could take their time about doing a little bit more and trying not to make it so obvious to those who are still blind to everything that's really going on. Again, that's my opinion when tying in the political with the technical. We've looked at the technical by trying to tie that in also with the political. Yeah, we're going up at the moment, but y'all know why. Elections are getting close, but watch out after the elections. Watch out. Alright, let's look at XRP for a moment. I'm getting rid of some tabs. Just give me a minute. Let me look at the short. I haven't looked at Bitcoin here in a minute, so let's look at the short-term group. It's still more kind of sideways at the moment. While still trending down, but still sideways at the moment. Now the B-bands are trying to expand, open up on this new 3-hour candle that started 50 minutes ago. I've been talking about other assets since then. We're finally starting to begin stage 1 expansion down in the 3-hour, but we need the blue to get down here below yellow level 50 in the 4-hour. Red and blue get down below yellow level 50 in the 6-hour. Still a while yet. I talked about that earlier. Those watching this recording of the stream, when looking at it later, you would need to, or those who are watching it now, if you want to hear Bitcoin analysis, you would have to rewind this live stream where I covered that probably for the next 34 hours. At that time, I was saying it could be 33 or 32 hours now. We could be going sideways until another 32 hours, where then we may potentially see a significant move down, potentially. It's possible they keep Bitcoin sideways along with the S&P 500 until the election, and then dump everything together, you know, crypto, legacy markets, you know, commodities, I mean, you name it. They dump everything. Especially if they lose election. Yeah, dump. They're going to dump the hell out of it. They win the election, they still maintain control of the House and the Senate. Then we're looking back to the slow and controlled bleed down rather than just a dump down. So we'll see. We'll see what happens. I think they're actually going to lose the House and the Senate in the election. I think there's going to be too many people voting this time for them to cheat without getting caught, and they know it. XRP, USD, immediate. Oh, hold on a second. Let's tell it. Pitchfork, then immediate. Oh, shit. Interesting. We'll work on this pitchfork. It's been a long time since I've worked on how to look at XRP, y'all. I forgot that I even created all this. I remember creating all this now. I want to say in 2020, possibly late 2019. I believe it was 2020 when I did that. But we're going to work on these diagonal trend lines to see about where we are on these Fibonacci diagonal Fibonacci extensions. You'll see what I'm talking about here in just a minute. Let me get rid of that immediate group, and let's start the immediate group here. Immediate, short, near, long. I see I did not create a macro or super macro for XRP. Alright, so that's immediate, that's short. Y'all see these old indicators I was using? I had badass B bands. I had Phoenix Ascending, but a different version. Alright, give me a moment. Copy. Delete. 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 Paste. 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 Delete. Copy. Paste. Delete. Paste. Delete. Paste. I gotta pee real quick. I'll be right back. Alright, pardon the delay there, but I had to pee. And while out, my wife said sweet rolls. We're ready. So I'm not going to be as long with XRP as I was with the others.
Red and blue below yellow level 50 in that 15-minute. Stage 1 expansion down. Will we get stage 2? Red's already below white level 30. The blue falls below white level 30. Stage 2 expansion down. Hey, don't y'all see the 15-minute that white lower B band is resistance? See where the red line is? Is the red line ready to go up above white level 30? No. Therefore, this current 15-minute candle, the odds of that price going up and remaining up above that white lower B band, closing above that white lower B band, the odds of that occurring is very slim, because that red is nowhere near going up above white level 30. So yes, we currently have a move up in the 15-minute time frame, but right now, at least, hold on a second, let me increase the font size here as well. Right now here, at least in this current 15-minute candle, the white lower B band at 0.458 cents. 0.458 cents. That white lower B band, this 15-minute candle, that's resistance. Yes, I know we're going up in a minute, but that may be it before then going down again. Let's have a look at the short-term group. That's the 15-minute, which is the highest time frame in the immediate group. But now let's go to the lowest time frame in the short-term group, which would be the 30-minute. $30-minute, gosh. Stage 2 expansion down again. Red, and now the blue went below white level white level 30. Red, and now the blue went below white level 30. Expansion down. The green's currently angled up at the moment, but 26 minutes remaining. Okay. Red, and now the blue's about to get below white level 30 in the 2 hour, where we could see continued expansion down. Hey y'all, my OBS disconnected there for a minute for whatever reason. I see it's back now again. I don't know why it's going in and out at the moment. I don't know why it's going out. That was twice it went in and out. I'm assuming everybody's still there and we're still live. Oh. I think my okay. Yeah, my internet went out for a minute. That's why. My internet went out for a minute. That's why. That's what happened. It appears to be back now, but for whatever reason, my internet went out for a minute. Alright, yeah, so we see expansion down here even with the red and blue below white level 30 here in the 8 hour. Let's go to the near term group. Can we fall down from the white upper to the basis? In that 12, excuse me, that's the 4-day, the 12 hours up here. Okay, let me get this back to how I do everything else. So let's put the 4-day up there. 5-day,
6 day, 1 week. Oops. 12 hour, 24 hour, 2 day, 3 day. Let me also that 12 hour with stage 2 expansion down is looking nasty. Looks like we're on the verge of beginning expansion down with the red and blue going below white level 30, falling down from the white lower B band with stage 2 expansion down. If we did fall down in the 2 day white lower B band, currently at 38 cents, the B band basis in the 3 day, this was the 2 day white lower B band, 38 cents, but the next candle will be about 39 to 40 cents because that white lower B band is rising, and the B band basis in the 3 day will be about 41 cents. I'm not convinced we're falling down below the white lower B band in the 6 day and the weekly yet. If we do, it's overextended down. If we do, it's overextended down. Let me look at this again. What time frame is this? 1 week. Okay. Let's go to 3 day. Let's also change that. Buying climax, automatic reaction, second test of supply, exponential reaction that closed above preliminary supply range that was right there. So that's not a sign of weakness. Plus that's impossible to have a sign of weakness in phase E. I'm curious, was that when the SEC started really clamping down in May 2021? Is that when the SEC got political with XRP? I'm not sure exactly when SEC started really hunting down XRP, saying they're security, and I think accused XRP of some other things. But then I think XRP sued the SEC and whatnot. And I want to say a judge stopped what the SEC was doing, trying to do. That was more like 2020? Okay. Because XRP did not have an upthrust after distribution in phase C. It just simply had a test of supply without an upthrust after distribution in phase C. It's just simply a test of supply. It also had a two-tiered or two-level distribution schematic. I'm not going to bother excuse me, labeling all the events and phases here. I'm just kind of looking at it myself. Sign of weakness, followed by an up thrust, higher low, nope, lower low. That sign of weakness was not done yet. Up thrust, higher low, yeah, still higher low, yeah, still higher low, yeah, still higher low, but no up thrust until here. Okay, now we got an up thrust. Up thrust what? Last point of supply event. Here we had an up thrust with a lower low. Well, then this could potentially be the bottom of our sign of weakness. That should be followed by an up thrust and a higher low, and we had all that. After the higher low, we should see an up thrust again, but an up thrust last point of supply event. That up thrust being even higher high for a up thrust last point of supply event in phase D as in delta. Again, this was a two-tiered, not a single tier or level, but two-tiered, two-level distribution schematic. And this is looking like an up thrust last point of supply event in phase D as in delta, and now currently working on coming down to eventually transition from phase D into phase E with a sign of weakness. This is the 3-day time frame, each candle a period of 3 days, but that's what it's looking like to me currently with Wyckoff Method 2.0. Now again, I'm not going to get into how this is a two-tiered, two-level distribution schematic, but it is. A very complex one at that, but yeah, it is. I can't stand that solid black background. This next 8-minute candle, I'm not going to bother sitting here another 5.5 minutes covering that, but if that energy begins turning down the next 8-minute candle, that price action is coming down. Why? Because that red line is not above yellow level 50, period. And I mentioned at the beginning of XRP analysis that red is not near white level 30 to go up above white level 30 to justify us going up above the white lower B band towards the basis or even the white aqua upper. You know, it's the odds are kind of against that. Let's just say that. The odds are dramatically reduced of that occurring. Let me change this one. And all these red and blues downward pressure was triggered. We have yet to see a red line in the short-term group get above level 50 to trigger upward pressure. Nowhere in this short-term group do we see the red even making an attempt to get above yellow level 50 to trigger upward pressure. We have yet to see that in the short-term group. Now we're starting to see downward pressure continue in the 12-hour and then the 24-hour. Now, the 24-hour. When the red line went below yellow level 50, downward pressure was triggered. That downward pressure, once triggered, will last for how long? Until the white energy closes above yellow level 50. Has the white energy closed above yellow level 50 yet? No. It came up there a bit, but then right back down again. Will the white energy go above level 50 to signal upward pressure in the 1 day before the red line in the 2 day can go down below level 50 to trigger downward pressure? My bet is on the red line in the 2 day triggering downward pressure before the white energy in the 1 day can go above level 50 to trigger upward pressure. Really, it doesn't trigger it, it just
creates cause for upward pressure to begin, but in order for upward pressure to continue to actually be triggered in that one day, that red line has got to get above yellow level 50. Got to. Right now, the red and blue are about to go below white level 30, saying we could see stage 2 expansion down. But with how high the blue is in the 2-day, I don't see any expansion down in the 2-day. But hey, look at the spread between the white upper and white lower. 31% in the 2-day. We only have 8.5% in the 1-day. Only 8.5% spread between the white upper and white lower. So yeah, we could see expansion down in the 1-day with only an 8.5% spread, and that expansion down really not be that big of a move in the 2-day because of how big of a spread we have. Again, the basis currently 41. Right now around 42, but as it comes down, as it comes down, 41. 41 is our current support. So if we did come down, let's see, 41 cents acting as support. Also, if we do come down, it might be a slow bleed. So even with XRP, it looks like it could be kind of like with the legacy markets, in that we may not see a significant move down in legacy markets until after the election. Until after the election. And here lately, most all of crypto has kind of been coordinated with legacy markets, especially the S&P 500. So maybe XRP even as well as Bitcoin, does not go down significantly until after the election. Oop. 21 day, yeah, that would be 3 weeks. All right, let me save. Let's now make a copy. And let's call it macro group. Save. Macro group, that will have 11-day up here, then 22-day, 23-day, 24-day, 25-day, 26-day, 27-day, then 28-day divided by 7 would be 4 weeks. Let's delete, 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 oops. Delete, 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 delete. All right. Just 1 minute. I need to do this too. I've gotten to where I just prefer a clean chart, so I'm trying to clean this up. Accidentally deleted volume, but no big deal. Okay, now it's cleaned up. I guess it is saved. Okay. Now let's make a copy again. And this one is super macro group. That begins with the 2 week, then 3 week, 4 week, 5 week, 6 week, 8 week, 10 week, 12 week. Auto, 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 auto. Y'all know why that yellow B-band basis in the 8 week was acting as resistance? Is this red line ready to go up above yellow level 50 to justify the price action going up above yellow B-band basis? No. Same thing here. Red in the 6 week is quite a ways from yellow level 50. So yeah, if we do go up, we might go up to the basis, but to go up from the basis to the white aqua upper, at least this current 6 week candle, no. Next 6 week candle, red goes above white level 30, and the blue gets ready to go above, yeah, then we could go above the basis a little bit. That's possible. That's looking like a death triangle in progress in the 5 week. A potential death triangle. Same thing. Basis 66 cents. So if I go back to that, up thrust, higher low. Low, up thrust, last point of supply. Followed by multiple last point of supplies before transitioning from phase D to phase E with another sign of weakness. We see the short-term group definitely looks like a sign of weakness could be underway, but and that 12-hour, 24-hour look nasty at the moment. Falling down from white upper B-band, at least towards the basis. Right now, a long position certainly is not on my mind. Would be shorting, but if you were shorting in regards to scalping, not swing trading, but scalping, if you shorted, close your short at 41 cents because it's liable to bounce back up again before then going down again, potentially, maybe. But right now, 41 cents is pretty good support if we do go down.
That's the yellow B-band basis in the 3-day. We're just not quite ready to fall down from the yellow B-band basis to the white lower until this red gets closer to yellow level 50 to justify falling down from yellow B-band basis to white aqua lower. To justify falling down the yellow B-band basis to the white aqua lower, that red has to come down more in the 3-day. Just not quite seeing that yet. But again, as far as scalping is concerned, using this short-term group, right now it's still down. It's most certainly down, but it's not in too big of a hurry to go down just yet. If we do see a pretty good move down, right now 41 cents. Looks like it could have pretty good support at the moment. I'm going to say 38 to 41. 38 to 41 cents. That range has pretty decent support for now, for the short to near term. Yeah, I think we are going down, but it's going to take a while with multiple last point of supply events while going down before finally seeing another sign of weakness, is what it's looking like to me at the moment. And there's plenty of time for that to occur. When? After the election. About 3 weeks from now. In that 4 week, yeah, we currently have upward pressure. Let that white energy turn down, and that red is not above yellow level 50. If that energy's turned down, that price action's coming down. That B-band basis at 71 cents most certainly is resistance. We are not going above the 71 cents anytime soon. That red has to get higher. So at least for the remaining 18 days, 17 hours in the current 4-week candle, I just do not see us going above 71 cents. Again, we could have death triangles in the works here in the 6-week and the 8-week. We don't have enough data for a blue LSMA in the 10-week and 12-week. They did not plot. Not enough data yet. Sign of weakness, up thrust, or low, up thrust, last point of supply. Yeah. That blue is still super low, even though the red's kind of high. And the 2-week. Yeah, my opinion is still in distribution as well. XRP is still in distribution as well, in my opinion. Not have a midterm group? Huh. Dot XRP. Where's my midterm group? There it is. So now if I ever look at XRP again, I have all this done. One more thing. No, I actually have that done. Okay. Four days, 17 hours, where then the blue might get above white level 30 along with the red to increase the odds of going up to the white aqua upper. That's around 63 cents, 60 to 63 cents. 63 to 65 cents in the 2 week, the white aqua upper, but we'll have to wait till the next 2 week candle that begins in 4 days, 17 hours. So right now it's turning down. The basis was acting as resistance. Why? We did not have both the red and blue above white level 30. The red's above white level 30. In fact, it's at 50. But is the blue at or above white level 30 to increase the odds of not just going to the basis but also going to the white aqua upper? No, that blue's not above white level 30 along with the red. So that's why the basis is acting as resistance at present. The next 2-week candle that begins in 4 days, 17 hours, will the blue be above white level 30? That remains to be seen. We will see. You'd have to look at lower time frames, lower than the 2-week time frame, to see if this blue line may eventually get up here above white level 30 along with the red to continue. In other words, to have a brief pullback to then continue up. I'm going to say 65 to 70 cents to that white upper B-band. 65 to 70 cent potential. And looking at it in the 2-week time frame actually makes more sense than the 3-day time frame. On our 2-tiered, 2-level distribution. Within a sign of weakness. Up thrust, higher low, up thrust, last point of supply, before then falling down further. Some are saying this is accumulation and we just begun a sign of strength. If this was a sign of strength that went above preliminary support range, then eventually we need to go above after a backup last point of support. We should go up again with another sign of strength if we are in fact in accumulation. I do not see confirmation of that yet. We don't know what we don't know until we know it. Right now I do not see confirmation that we are in accumulation for XRP just yet. And XRP is quite much more difficult because of what's going on lately, how it's a confrontation with the SEC has really affected the price too. It's really kind of out of whack. So at least for the short term right now is coming down, but yes, there is potential to go up to 65 to 70 cents. If we do go up, we're looking at 65 to 70 cents if we do go up. But we keep having downward pressure triggered, y'all, one time frame after the other. I'm talking about the 12-hour, then the 24-hour. Now the 2-day, the red's about to go below yellow level 50. When it does, that triggers downward pressure that lasts for how long? Until the white energy comes up to level 50. Will the white energy in the 2-day go above level 50 before the red line in the 4-day can come down below level 50? That remains to be seen. The white energy in the 2-day going above level 50, several 2-day candles going above level 50 before the red line in the 4-day can go below level 50. I need to also change the font size here. I just don't see a big rush in us going down yet. Is this a possible selling climax? Automatic rally, second test of support, simple rally, test of support, then immediately into sign of strength? Yeah, that's possible. It most certainly is possible. I wouldn't count on it, wouldn't bet on it, but it's possible. I'm thinking still more expansion down in the 12-hour and 24-hour. Especially with all the short-term group, red and blue below white level 30. Now the 12-hour and about to be the 24-hour red and blue below white level 30. More expansion down. And there's room for contraction down in the 2-day to the white lower B band, even though we're getting expansion down in the 1-day. Huge difference in percentage spread between the white upper and lower in the 2-day versus the 1-day. That explains why expansion down versus contraction down. If we want more continued contraction down to the white aqua lower, the odds of that occurring increases if both the red and the blue get below white level 70. That has yet to occur in the 2-day. So this may still kind of go sideways a bit, and the white up lower might come up to meet the price action. This is one of those times in which you just strictly have to go one time frame after the other, meaning we went through the entire short-term group, then to the 12-hour in the near-term group, now the 24-hour in the near-term group. Will the 2-day get us to fall down from the yellow basis to the white lower? This 2-day candle? No. 16 hours, 15 minutes remaining. The next 2-day candle, it's possible to begin going down to the white lower around somewhere between 38 and 41 cents. I can see that, but it's going to take time. Yeah, I think we're in a slow bleed down to somewhere between 38 and 41 cents. What we do after that, I'm not going to say that yet. That's too early to say. Well, we don't know what we don't know until we know it. That's too early to say just yet. I'm not going to conclude that XRP is necessarily still in distribution. I'm not going to draw that conclusion just yet. Alright, I think I'm going to call this quits, y'all. I haven't done a stream this long in a long time. My throat is actually getting sore from talking so much. How many hours has this stream been going? 7 hours? Oh, wow. Yeah, we had a pretty. I'm kind of getting hungry, to be honest with you. And when my wife says cinnamon rolls are ready, I'm like, oh yeah. I want to give me some cinnamon rolls, but they've been ready a while. I think they're cold now. I'm going to have to reheat mine in the microwave or something. All right, I believe I'm going to go ahead and call this quits, y'all. I am going to go ahead and call this quits. Sorry I'm not much helpful on XRP here at the moment. There's a lot of mixed right now with XRP as far as higher time frames go, but lower time frames, the short-term group, the entire short-term group, and the 12-hour, 24-hour, and 2-day of the near-term group, it's kept going down and down and down. We keep having downward pressure triggered one time frame after the other. How long that continues, well, you just have to keep following it and see. One time frame after the other. Of course, I'm not providing signals for scalping. I'm not providing signals at all for XRP, but it's actually showing potential that we are an accumulation with potential for sign of strength, at least more so than any other pair I've seen. That could be partly due to what's already been going on between XRP and the SEC, and that basically just forced it to be too dramatically oversold, and now it's correcting potentially. But I'm not going to say, note I said potentially. I need more things to play out to see if we can fall down from the white upper B band in the 5 days, well, 4 day, 5 day, 6 day, weekly. I need more time. That's going to take at least another 4.5 days before we have any idea of that, in my opinion. Are we on the works of that potentially occurring? Yeah, based on what we're seeing in the short-term group and the 12-hour, 24-hour, and 2-day. But will that continue into the 3 day, especially the 4 day, 5 day, and 6 day? Are they going to trigger downward pressure? Well, the red on those time frames has to come back down below yellow level 50 to trigger downward pressure. And that's quite a ways away. XRP looks quite a bit different from the other pairs, especially in the 4 day, 5 day, 6 day, and weekly. So it's possible it could be an accumulation. We'll see. I'm not going to say for now, whether we just don't know yet. But it has a chance that it could be an accumulation. It could. It's possible. Oh, you're back. Yep, my back is getting definitely better than what it was the first 2 days. Yeah, the pain's still there, but at least I no longer have to take Advil. I stopped taking Advil actually as last night. I did not go to sleep with Advil, taking Advil before going to sleep. So that's a good sign that I stopped taking Advil and I don't feel like I have to take another one again. My pain is not as bad as what it was. Alright, I'm going to go and call this quits, y'all. And thanks for joining. Stay awesome, everyone. Yes. Peace through crypto. We don't have to be at war with one another, regardless of what country you're in or whatever. No, that's people in higher places that want to start things and do things at our expense. No, we can be at peace with one another. Peace through crypto, peace through poker, whatever. Let's just all be at peace with one another instead of allowing others to manipulate us to be at war with one another. Let's not be evil. Let's be good. Alright, let's call it quits, y'all. As always, you know the drill. Let's stay awesome.